Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live. Joining me in studio, our senior economist, Tracy Shuchart, otherwise known as Shy Girl. Good morning, Shy.
Good morning, all.
And joining us from the coast, the East Coast, Charleston, South Carolina, the one and only senior market strategist at NinjaTrader Live, Jimmy Cagnina. Good morning, Jimmy.
Good morning, Dolly. Good morning, Shy. It is another glorious day. Great for trading today.
Yeah, I mean, how could you not love Jimmy's positivity every day?
I know, it's enlightening.
Yeah. And good morning, chat. Great to have you here with us today on this Tuesday morning. Summer markets, I think, are here, and I'm going to talk about why pretty much all morning. I think that if this news did not rattle the market enough to bring in a large amount of volatility, even a medium size, I mean, it wasn't. I wouldn't say it was too slow, but nonetheless, I think that most people expected it to be a little bit busier. I mean, obviously the oil market's busy. That thing is moving right now. But I think for equities, I think take yesterday's, or Sunday nights into Monday morning's move out of the equation. I think that we're going to be in for summer markets because it just feels like it. And a couple of things that come to my mind when I see this tape right now. Number one is that, equities, we talked about this yesterday. If they did not take that bearish news yesterday. We call it bearish news. We don't know what news really is. I mean, that's also something to keep in mind here. If that news did not take the market down yesterday, we talked about this in the morning, and get us, the VIX spiking hard and get the market rolling to the downside, breaking some key levels, like actually showing some signs of weakness. What do you have left, right? And then, so there was that, and then you took markets that are in trend, got accelerated a little bit, like oil, right? And this is where we lean on you a lot, Shy. Oil is a market where you've been saying since 55, it's an underlying bid. We could go up into the 70s. We get to the 70s, sentiment turns super bullish, news headlines come in, we drop like a rock to the mid-60s because people like you and everyone else that we've had on this show say that, look, oil doesn't have a real big reason to go beyond this. So you get to this testing of the edges. There's no participation. And you said this to me yesterday. You said pre-war or the possibility of war is bullish, but when war eventually happens, and I'm not sure we even call this, I mean, it is a war, but
I mean, the U.S. directly involved.
Exactly.
I would count that as that.
Yeah. Now, all of a sudden, you get back in reality. And again, we lose sight of the big picture. We get so focused on the headline that things should happen that don't, that ultimately, people that have already been positioned use that liquidity to take us the other direction. Gold is another market. It tried to go higher. It couldn't. It's down nearly 2% today. So when I look at those types of things, markets, news will test the boundaries of trends, or it will bring energy into trends that need it, like equities. And then all of a sudden now, because it didn't take us the other way, we now have a path of less resistance higher, is what I see. I talked about this yesterday. What I do want to point out this morning is interesting is, platinum again, above 1,300. That's a real supply and demand story. You could take everything out of it. We've been talking about this for weeks, you and Jimmy, consistently. It's one of the very few trades I've done in the last month was the platinum trade. And that trade continues to just keep going. So we'll talk about that this morning. And last thing, I get to bonds because I want to get to you and any news. Go back and pull up a daily chart, everybody, of the bond market. It's done nothing. I mean, it's really done nothing. I mean, crude is even, if you go back to the beginning of the year, it's down slightly. What's it down, a few bucks now? Everyone's talking about percentages on crude. It's down. Doesn't matter. It's down $3.
I mean, exactly. I mean, it's still in a trading range if you kind of cut out the geopolitical spike to 77 twice and then the 78. But, we're still range bound.
Yeah. And so I think that, again, we have to get into perspective, everybody. Look at, as traders, I was talking with a longtime trader friend of mine when I was recently in London, and he's same age as me, 47, been doing this a long time. We get to the point where we say, look, we're constantly adapting. It's funny, no matter how long you're doing this, you're constantly adapting. He's like, man, these market environments just change so quickly on us versus the first probably 15, 20 years of my career versus what it's been the last 5 plus. And that's what you have to do. You have to be able to. You can't over anticipate what these markets are going to do. I think it's important to stay grounded every single day. Come in calm, approach the market, with an open view that anything could happen, and these environments change on a dime. And that's what I think we see on a continual basis. That's kind of just my thought process. I'm just trying to slow people down and get them in for the long haul here. And the long haul is, let's be in business for a long period of time. Let's get caught up too much, over anticipate these moves. It's June. We just got on a rollover. We still don't have clarity on tariffs. Let's pump the brakes. Let's get ready to trade this market every day. So speaking of today, what do we have overnight? What is going on in the news cycle?
All right. So last night, Trump called a truce. And of course, that pushed down oil markets even further. But apparently, I woke up this morning and the truce was not holding anymore. So Trump is at the NATO meeting in the Netherlands. So, be prepared for some NATO headlines later in the day. But of course, he was asked about the Israel-Iran situation. He said, do not drop these bombs. If you do, it's a major violation. Bring your pilots home now. He's blamed both Iran and Israel for the violated ceasefire, but he says that he thinks that the truce will hold, whatever that means. But markets completely, again, unfazed by this. I mean, we've kind of got this endless hated bid in U.S. indices. I think the markets obviously have kind of moved past this. Crude barely budged on this news that the truce was violated at all. So I think markets have already completely looked past this situation, although we will keep an eye on it because you just never know what happens. What else was interesting is yesterday we had Bowman, a hawk, generally, and Goolsby, a hawk, generally. Remember, I mentioned that they were speaking, and out of nowhere, they both became doves. And she started talking about a July rate cut, and Goolsby also said that can cut rates if tariff inflation doesn't come. And so, if we look at the markets there now, we had a 10% chance of a July rate cut, and today that's up at 23%. And so we have a bunch of other Fed speakers today. So let's see who else kind of turns dovish and
well, they're placating to the president. They're going for the job. Let's face it, that's probably what they're doing. I mean, yeah. Oh, hey, we'll cut rates for you. Put me in charge.
Right? Yeah.
Well, so again, it's a new day and it's a different day, and we have to focus on what today is. And thanks for catch us up. I'm sure we're gonna have a lot more to talk about this morning. So we got a real special guest today. Boys, yes. Is he special? I'm sure he's watching. I can't wait to talk to him. We'll plug his name in a moment. But I got to go to you, Jimmy. Here's the thing is, I talk about slowing things down, but there's a lot of opportunity in markets, and there's a whole big marketplace of markets out there, right? And we get so caught up in everything equities are going to do. And of course, we've been talking a lot about bonds, and we talk about, gold and oil and the other stuff, but there's a lot going on across the spectrum. What do you see coming into today? How different of a day is it from what we saw over the weekend?
I don't think it's going to be much different. I mean, the velocity of the news that's coming out, the frequency of the news that's coming out, it's hard sometimes for traders to filter that information and decide, is this a real cause and effect idea that's coming up through X or wherever you're getting your news from? And so because of that, you got to have your stops in. If you take your paper cuts, that's okay. Stick with your plan, go with your setups, but keep in mind, this news comes out of nowhere. It comes quick, it comes fast, it comes hard. And sometimes there's this knee-jerk reaction that's not the right reaction that happens, and people get whipsawed. So it's something that you have to kind of be deliberate with and mind your leverage sometimes in an environment like this. But hopefully, it'll start tapering off into normalcy one of these days. But I don't think that's today, Deli.
Got it. I want to know what your thoughts are in the bond market because the bond market, I mean, the thing is just getting sloshed around, Jimmy. I mean, it is, you know, down a point, oh, we're going to keep breaking, up a point, we're going to keep rallying. Every move is met with a fight back to the middle. And it makes sense, though, right, Chai? I mean, I know I'm talking to Jimmy here about this, but it just the Fed is just on pause, rates are on pause, and we continually look at the bond market for some sort of leadership of where we think rates are going, and we're just not getting it, Jimmy.
Yeah, I mean, the 30-year, I mean, we did have a little bit of a triangle here breakout, but not much to speak of. Now, keep in mind, bonds, the low print on bonds in May 22nd was a 10 handle, almost a 9 handle. And now we're at about almost a 114 handle. So it is a subtle kind of move up with yields under 5% right now. It's not a huge breakout to the upside. It is kind of sideways when you start putting your cursor through the candle bodies and seeing how many times we traded around that 114 level over the last couple of weeks. It's been a lot. Moving averages are tight and going sideways. So is the stochastics. So to that, yeah, it's pretty tight and kind of sloppy, but there's a subtle movement up right now. I'm not ready to say we're not going to continue yet, but we have some wicks we have to take out, like this one up here at 114.30 before I'm ready to jump on the bull bandwagon. But you're right, it's kind of sloppy, but still a little bit slight upward pressure in the 30-year Treasury bonds.
Back to you, Shai. Gold's down $60 today, down nearly 2%. I talked about it this morning just a touch that look at because gold didn't accelerate off of the headlines that we had over the weekend, it's now taken back into range, And when you look at gold, it's now breaking some moving averages. I'm sure Jimmy will go over gold in his edge report this morning, but gold is near the lowest part that it's been for a while. Failed to make a new high on the recent move back up. I know we've been through rollover and all of that with gold. Gold rose a lot more than equities does monthly. So, I mean, what's going on in the gold market? Is this just a consolidation? Is there any news?
I mean, really, I think it's a wide consolidation, but it's still, a consolidation. I mean, I actually expected gold to pull back a lot more, but it's kind of, hanging in there between this, let's say 3,200, 3,400, 3,500. We're still kind of sloshing around in this range.
And what about silver? I mean, silver, everyone was getting so bulled up it. You know what? When you looked at it, it took out. Remember when we took out the low 36 price that where everyone was looking at was like that July or whatever it was of last year's high, and now it again. It just took it out, and it's just sitting right back there.
Yeah, I mean, again, I think this has been in kind of a consolidation all month. We hit that high of 37, but we're still well above 35. And so kind of this entire month's been between 35 and 37. So again, I think this market's on a pause after a very big move up. It is holding up much better than gold, I would say, at this point. And we've talked about the fundamentals behind that as well.
Yeah, and silver and platinum are holding up much better in this environment than gold. Gold, if anything, I mean, is just pure, just sideways action. Again, rallies are getting sold, and breaks are getting bought. So let's not forget that. It's not like it's turned bearish. It's just turned into a sideways tape. And if you're trading gold as a day trader that likes mean reversion two-way action, you got gold and micro gold. I think it's it's volatile. I mean, still, I think a decent trade. Last thing before we get to Jimmy's edge report, crude oil. So it did come off hard. We talked about this yesterday. I said, you know what, the fact that it didn't follow through in the news, we had this long discussion about it. Okay, look at oil. We don't see reasons for it to go above 80, but all of a sudden now we're back in the mid 60s. I don't think anyone thought it would happen as quickly as it did, but it did.
But it did. And again, we're still back in range. Quickly, though, I'd like to go over the data today. We have 8:55. We have Redbook. 9 a.m. We have FHFA Housing Price Index and S&P CoreLogic Housing Price Index. I will be curious to see that. I'm looking for any weakness in the labor market. At 10, we have Richmond Fed Manufacturing and Services Index. Also, Conference Board Consumer Confidence. Then at 10, we also have Powell starts his two-day testimony at the House today. It will be at the Senate tomorrow. So I'm sure there will be a lot of headlines on that. I will be watching that. And then 12:30, we have Williams. 2:05 we have Collins, and 4 p.m. we have Barr. They're all out this week, folks.
Yippee. Can't wait. Yeah, I mean, it's exciting. Last thing before we get to Jimmy's Edge report, guess for today.
We have Ryan Paisey of PIQ Suite. It's a awesome news platform. It's kind of like the old TweetDeck, but much, much better. So I'm sure you've seen his posts around. He posts, or his people post a lot of news. But, he also was a pretty big crude trader back in the day, but he doesn't like to talk about it. But
was he now? Well, I look forward to speaking with Ryan. I might have had a pint or two with him last week, too. He's my guy. I can't wait to have him on. All right, everybody. It's about that time for the Edge Report. Take it away, Jimmy.
All right, well, let's start with gold. I have a daily chart up on the screen, and we could see a big red candle today. So far session, we're selling off back. We broke below that 8 EMA. We broke below the 21 EMA. This is a relatively big sell-off today. We have the 50 EMA in sight right around that 50% fib retracement that I drew on the right-hand side. And this has been going on, by the way, since the 16th. So there's been several sessions where we're having this kind of not so gently sloping downward move on gold with the 33.27 print right now. And you can see it in the stochastics, right? We just nice sloping down in the stochastics right now also, which is tracking a little bit bearish here on gold. Intraday, though, we had that session VWAP, and we've been trading ever since, I don't know, about midnight. We've been trading below that session VWAP and creating price separation between the VWAP and the price. So this is pretty negative, pretty bearish intraday chart as well. I mean, targets, we blew through S2 just a little while ago, and you can see there's not a lot of downside targets. I mean, S3, well, the range was huge yesterday. That's why S3 is all the way down here at 32.81. That's really my main area of interest on the downside. It's pretty far away. For the bulls, we do have that put support from Mentor Q at 33.45, and a little bit higher up on the screen, we also have that one-day min, believe it or not, is way up there also at 33.58. So there are targets on the upside, not so many targets on the downside on intraday chart, but we have a nice distribution here where the point of control is sitting at 33.37 right now. We're trading below it. Not a lot of volumes accumulated yet. We'll see if we keep on going, but this is looking pretty bearish right now on gold. Let's shoot over to crude oil, since that's also an overly dramatic chart on the daily, to say the least. I mean, we have this giant candle here yesterday, huge sell-off, and this is what I'm talking about with these news cycles, man. You just don't know. And then continuation selling today. We have that 8 EMA do an abrupt turnaround to a bearish disposition right now. We're south of the 21 EMA, and we're sitting on the 50 EMA right now. This fib line, forget about it. We blew through it all the way. I'm going to have to rethink my fib on this thing. Right now, we'll see if we get a pause or not, but there's not a lot of bullish sentiment here. The stochastics, again, arcing downward pretty nicely as well on crude oil. Intraday, we do also have some targets up and down today. VWAP, we've traded through it a couple of different times today. That's not in play right at the second, but we have that DTE put support right at 65 bucks. And then below that, we do have S1, which is part of the daily pivot study. That's at 63.09. On the upside, that one-day min, that's approximately at 66.35. I love these Mentor Q levels as well. JAX 4 is at 67. We have a high vol level at 67.80, and then a JAX 2 at 68 even. So there are some nice targets here in crude. And the distribution here, if you look at the volume distribution, it's really perfect. It's textbook volume profile here. Point of control pretty much right in the middle at 66.33. And it's a decent bell-shaped Gaussian distribution right now with a really nice value area as well. So maybe we'll have value area trading right now. The London initial balance kind of respected that as well. Really quickly here, with a couple seconds we have left, let's just take a look at the E-mini S&P, and we are breaking up and out. right? I mean, this was where my resistance was here. Remember, September contract recently rolled 60.91, broke out uh, today, and we'll see if it holds or not, or if we just end up with a big wick at the top. All the moving averages are moving up, stochastics are moving up. Intraday targets include, bear with me one second. For the bulls, we've got this R1 is going to be a continuation breakout level here. That's 61.66. The high was in the London initial balance so far in the E-mini S&P. And on the downside, we have that call resistance at 6,100. That's not surprising. VWAP has held pretty good until now. We'll see if that session volume weighted average price holds or not, if buyers can stay in control. So that is today's Edge Report. Back to you, Deli and Chai.
Thank you, Jimmy. And we are now joined by the one and only Ryan Paisey, PIQ Suite. How are you?
Hello from London. I'm very well, thank you, guys. How are you? Can I just say before we get started, we always say that discipline is probably the number one thing you need for trading. As the three of us know, I kind of stopped trading a little while ago, but I've never been tested on my discipline as when I was trying not to unmute myself to challenge you guys when I was being called special. Because
Yeah, well, we're kind of loose with some of the language we use around here, so you fit into the category. But let's start off with. Yeah, no, you're the best. If people don't know, I was just with Ryan in London. He's one of the greatest people you ever meet. And so if you're not following him on Twitter, you absolutely have to. He's just a phenomenal guy and he's really great for this industry. So look for more to come with Ryan on this network as well, plugging that. But Ryan, I want to talk to you about crude oil because you were, obviously size trader at one point in time. So let's talk about that. So this morning we're watching crude again. It's going down quicker than like the cider that's in your glass, so it's dropping quickly. I got to drink with Ryan. I can vouch for they go down pretty quick. So what do you think about what's happening here in crude oil?
I think firstly, one thing I love about markets like this is, and apologies for people that I may offend, which is quite a few people usually. One thing I like about markets like this in moments of extreme stress, and I know Chai feels the same, is masks slip on so-called experts, and I think that's what we've seen definitely with what's going on at the moment. It's been a steep learning curve, I think, for many day traders and retail traders that have never traded crude before, and I think this kind of ties in really well. Sorry to kind of move away from specifically crude, but I think this ties really well with Deli, what you were saying about your conversation with Brez when you were over in London, about how markets change and traders should be in this for the long term, and jumping onto a contract or a market you aren't familiar with in moments of extreme stress is a very quick way to go to the poorhouse. And I think we're seeing that. I think we're seeing untold retail trades and day trades being carted out trading markets they have no experience with just because it's in the headlines a lot. And it's very, very hard to sit on your hands if you're not experienced in the market when you see all this action going in. Because let's be honest, the move we saw after the Iran strike was phenomenal. There was a significant reason behind that. It was because we now knew what Iran's response was, and it was not shutting the Strait of Hormuz. Let's be very clear on that. And that's again, there were so many people calling for the strait to be closed, and this is the obvious thing for Iran to be doing. Chai was one of the few. Myself and our team were doing the same thing. We're saying, look, this is still incredibly unlikely that was going to happen, and it remains incredibly unlikely. And no one should hope for it to be closed. But no, I think it's just been a really really fascinating market to watch, not purely for the price action, but to see the human interaction with what's going on. I think we've obviously got this pause at the moment. What we're trading like 60, around about 66 before I came on air. Is that roughly where we are now? I hope
65.50. Yeah.
You say something that's $5 out. I've had a shocker. But no, I think it's really interesting now to see where we go next. These aren't the kind of markets where I think you can just say, oh yeah, I think we'll go higher, I think we go lower. I think we are very much event driven. So again, all eyes on the headline feeds, hence why you need to be looking at PIQ, right?
Absolutely, right?
Shameless
I mean,
plug.
you saw, I like it. Get in there. You know, how do you, or how do you think traders, when you have all this information, particularly on X going so fast, and you have a lot of misinformation also at the same time. So, how do traders kind of ascertain what is correct and what it actually means?
That's a phenomenal question. And I think it's it's hard because I think X, Twitter, whatever we're going to call it today, it's been a phenomenal tool for trading. I've said in the past, I think I've actually said years ago with you, Tracy, I liken how Twitter has come about as almost as big as a change to when we went from floor trading to screen trading, because you can actually have direct access to phenomenal people, not just in terms of traders, not in terms of analysts, but you're seeing presidents, tweet directly before it even goes through Reuters and Bloomberg. You're seeing like Fed officials directly on Twitter. So there's so much signal there, but like you said, you need to know where to look. I think that's the hardest thing with Twitter. And I think this is a massive issue for a lot of, especially new people to the markets. It's so easy to follow, excuse my French, bullshit merchants, because there's a lot of snake oil out there. And that's kind of one of the key things that we're trying to do at PIQ. Like, I'm a big believer, I know you guys are as well, of Twitter lists, because you can really refine down. Pretty much, the reason why I started PIQ was, I stepped away from trading just before COVID. I was fortunate enough to realize that markets were changing and I wasn't. Don't get me wrong, I gave a lot of money back before I realized it, but I finally realized it. And I stepped away from professional trading and realized, what, unless you've got access to Bloomberg or Reuters, the information's there, but it's incredibly difficult to filter it. So which is why, we decided to kind of put together a news terminal for retail traders predominantly. And again, hopefully we can help users or help clients, help traders, market observers, whoever, stay away from the snake oil merchants, because it's so easy to fall in the trap. Because, I've done it, over recent years, I've kind of been sucked into thinking, oh, this guy knows what they're talking about, or this woman knows what they're talking about. And again, in terms of, as soon as we get periods of market stress, masks slip and you realize, hang on a second, that's not so easy. If I was a new trader right now, obviously straight away I'd be using PIQ and following PIQ's feed, but also the likes of you two. I think, the reason why we're friends, internet friends, well, me and Delhi obviously real friends as well, but waiting for Chi to come over, tried to come over for a beer. But yeah, I think follow the people that legitimate people follow. I think is a very easy way to do it, and also stay away from the hyperbole. It's so easy to get sucked into. No matter how disciplined you are, no matter how experienced you are, you will get sucked in eventually. And it's how you deal with that as a trader.
And also, just with this particular situation, it seems like markets have kind of already looked past this violation of the truce hasn't shaken the markets. Why do you think markets are shrugging this particular event off so quickly?
I think because we kind of know, I know history doesn't repeat, it often rhymes, or whatever that famous quote is. It's very clear that Iran aren't looking to full escalate, and they're not looking to shut the Strait of Hormuz for oil markets. I think, we're very likely to see tit for tat. I think my bigger concern, to be honest, is what Trump does next rather than Israel or Iran. Because, we saw just before we came on air, Trump dropping F-bombs, which I don't think a sitting president has ever dropped an F-bomb on live TV. So that was an interesting one. Yeah. So he basically, if I'm allowed to drop one F-bomb on the show, he basically said that Iran and Israel don't know what the fuck they're doing. Excuse my French, but I'm quoting a president, so you can't do me for that. Surely I'm allowed to quote a president. These are very, very unknown times. So it's incredibly interesting. I think, to be honest, we had such a moving crude yesterday. I think sideways today makes sense because there's a lot of people that have spent their powder, and we're probably going to see a lower volume. Of course, we're going to see a lower volume day. I think we just need to consolidate and work out what to do next, because let's be honest, as we've seen from the last 72 hours, trying to predict what happens next is a fool's errand. And it's far easier and I think far safer to react to the news that comes than try and predict it.
Let's stay on that for a second because you made an important point. I mean, the market is in a mode where news is driving us. And I talked about this earlier. You have trends that are in place like equities. Equities have been consistently grinding higher. You have news that takes us as a mean reversion move and that actually built the energy to then take us back up because it failed to follow through on the other side. Crude oil extends its range to the upside. The news doesn't follow through with it, and it's like a vacuum back in, and we wait and see. You could kind of say the same thing about gold, right? And so this is the adapting part, Ryan, that, you know, you and I and Shai and Jay and Brez, we've been around a long time. And this is I think the fine tuning of where each and every day the traders come in, and it's hard to put that recency bias that people call it behind them, their underlying hidden bias behind them, and look at the news and take it for what it is. How do you? What's the advice you can give traders to reset every day and to take the day for what the day is?
It's a massive, huge cliche, but if in doubt, zoom out. And yeah, it's a huge cliche, but it really does work. It's so easy, especially when we've had a large move. It's so easy to focus on, you know, I've got crude chart up on my screen now. I'm looking at a 5-day chart. I'm looking at a 1-day chart. You know, that's because I just wanted to keep an eye on where we are for the show. But as a trader, when we have huge moves, it's so easy to get sucked into that and looking at what the chart's done just on that past event. And you really need to kind of, you know, well, I don't know about you guys, but I've always been a big fan of post-it notes on one of my multiple screens. And it's literally multiple post-it notes will say, if in doubt, zoom out, because taking that time and going back to larger time frames will really allow you to kind of reset mentally and say, well, look, do you know what? This has been a huge move, but really all we've done is come back into the range before Israel started bombing Iran. And if you've got the discipline to do that and get away from, you know, what the near-term chart and the price action has done, it gives you a much better feel for where we could go next. Because, you know, if you're only looking at the past 5 days or even the past month, perhaps, it's going to tell a completely different story than if you looked at the year-to-date chart or the 1-year chart or whatever. I think it's so important to do that. But again, it's easy for me to say this sitting on this end of the desk, having not traded professionally for quite some time. But, you know, and I think this is why trading markets that are extremely volatile as a very new trader is very, very difficult to do. And you know, no one on this show is ever going to say trading is easy. It's the hardest thing in the world, because it is discipline. You know, it's one of the reasons as well why I don't believe you could ever follow someone's strategy yourself, because, you know, you can have the best strategy in front of you, but if you haven't got the right mentality to back or to trade that yourself, you won't ever execute it perfectly, which is why traders have to find their own way of doing things, because you can't shoehorn a trader into a certain way of trading. They need to find their own way that matches their own internal risk reward.
Spot on, and you know I've pounded the table on that. We've only got Ryan for a minute and a half left. Shai, any final questions you have for Ryan?
Yeah, I mean, just kind of some maybe final words of advice that you have for traders. I'm sure they'd like to hear it, that maybe that we don't know what to question you about, but that have kept you sane.
Well, I think people that know me, including you two, know that I'm not really that sane anymore. So that's probably a difficult one for me to answer. But what I would say
should
for
have phrased
new
that differently.
yeah, right. What I would say for new traders is pretty much ties in with what Deli said about the conversation he had with Brez over in London last week. Be mindful that you're not going to make a career in a week of trading. You need to keep, you know, your money. You need to keep your bullets in the game. It's slow and laborious to become a good trader, but the upside is phenomenal. You need to take your time. You need to follow the right people, in which case, I'm looking at you two here, and you two are the phenomenal people for a new trader to follow, and as is this show as a whole. And just be mindful that, you know, Lambos and all this stuff that you see and all that, that's a load of BS. To become a successful trader, requires discipline above all else and time. And the longer you can stay in the market, and I don't mean in a trade, I mean actually being able to put trades on, the more success you will get, and the higher the percentage chance you'll become a successful trader. It's all about capital preservation. You won't make a career on a day. Well, very, very unlikely, but you can very easily lose your account on a day. So think about, it's almost flipping what the Instagram crowd and all that say. It's capital preservation, discipline, and knowing that again, I know it's a cliche, but it's bang on. It's a marathon, not a sprint. And
we will end there. But the conversation will only continue with Ryan on this network. Ryan, you're the best. I love you, buddy. Thank you so much for being here.
Guys, thank you so much for having me on. Much love.
All right, everyone. Make sure you go and follow Ryan and check out what he's doing with PIQ. Like I said, phenomenal human being. He's got a great service for everything that he's done, putting out there on Twitter. I'm getting more and more people on X to go check out what Ryan is doing. And like I said, the story will continue to unfold with him and what we're doing with him on the network. Like I said, he's one of the good guys. Shai, final thoughts for today. We talked about news. We getting set in for what the day is. Anything else we need to be watching coming into today?
So I think we need to be mindful of what the Fed speakers are going to be saying today, with kind of that about face that we had from the two of them yesterday, Bowman and Goolsbee, because that can affect the bond market, which is kind of the most important market.
So they say.
Watch that. There are going to be a lot of headlines today, so try to cut through the noise, keep it tight, and good luck today, everybody.
And of course, Shai will be in chat with any breaking headlines. Also, always check that middle center part of the network, that big white bar across the bottom.
Below us,
right there.
It's got all the headlines.
Yeah. And that will be the headlines. Thank you so much, Shai.
Thank you.
All right. Bring in I'm trying to think, what was I going to call you today? I was waiting to see if there was going to be, you know what it is? You've got me on my heels a little bit. I'm like, is he rotating in a hat? Is he coming in with an outfit? I didn't know where you come in completely normal today, but you look a little tired today. I think you look a little tired today. How you doing?
Yeah, I might be catching a little bit of the COVID, hopefully not, but feeling a little bit under the weather as of last night. So we'll see how hard it hits me, I guess.
Oh man. Well, I'm wishing, your wife a speedy recovery and that, and hoping that, you and your family are all doing well. We've got some time to focus on markets, you and I. It was great to hear from Ryan. I'm sure you follow Ryan on Twitter. I don't know if you have or not.
Absolutely. Yeah. And, what I appreciated about that was just, the discipline and the grind. He talked about, trading not being easy. Like, the mechanics of trading aren't really that hard. Learning what support and resistance are and, learning technical analysis is not hard. The discipline is incredibly hard. And the ability to, find the way to embrace the grind is really what most traders really struggle with. Taking too many trades, taking impulsive trades. And, it's hard, especially on an intraday basis, right? Information is just flying in your face, prices all over the place, and you have to process information, make really fast decisions. So it kind of lends well to impulsiveness. And that's definitely the struggle that a lot of traders have.
Oh, no doubt. I'm glad we got into that conversation this morning with Ryan, because he's delivering news in a way that I think retail traders can at least dissect it and utilize it in some way. Not the easiest thing to do for those that are new to markets. It does take a lot of time to kind of understand and kind of see beyond, the headlines. It's difficult no matter how long you've been doing it. Let's face it. That's why markets are always here to prove us wrong. But let's take a look at the chart today and see if we could find some opportunities. I'm going to start with the bond market here today, because the bond market, to me, I go back to what happened on Sunday night, and, of course, I go to the 30-year bond. Anytime we have big data points, big headlines, first market I look at always is the bonds. The bond market, again, going back to what Ryan said, if you zoom out, it's just a grindy upward trend here, and it's interesting. You hear Trump continuing to pound the table on we should be cutting rates. That's his, tweet storm as of late. Powell is, way behind on cutting rates. He can always raise them later. I was reading, I'm just trying to keep up with what he's putting out there. But this is an interesting moment because you've got all these Fed speak today. And yesterday we had Shai talk about how some of the hawks had turned dovish. I think it's interesting as the bond market continues to rally here. And I think why this matters is because it's a general perspective. I don't think it matters too much to the short-term day trader right now when we get into equities. I do think on a little bit of a wider time frame, the fact that it looks as though, rates, we don't know, but rates are going to continue to come lower as the bond market continues to grind higher. And I think that only opens up the door to higher prices in equities again. And so it's something to keep in mind. And I'll be watching it today as we've got like that Powell, I think it's at 10 that Shai had said or whatever, it's coming out. Just constantly keeping an eye on the bond market. But when you look at it, it's just been continuing to hold all the moving averages. If you just looked at this and you didn't know there was any news over the past month and a half, which there's been a ton of it, what's it done? Every dip has been bought and we continue to make higher highs. I think it's something to keep a note of. I'm also going to go into gold. The two markets that, again, when you're in a news-driven environment, everybody, the two markets I look at first is bonds, second is gold. What's happening? Gold continues to sell off. Gold is now escalating to the downside. You've got this recent low. Let me zoom this out a little bit here. This recent low comes in at 33.13, and you look at today's low, which is 33.18. If that gets violated, you then come into this potential low back here, which is 32.69. And I know that Pax talks about, I think, he'll correct me if I'm wrong, I don't know if he's in chat this morning, it's 33.32 or something like that. I know we're in his area. I'll put that in later to make sure I get that right for him. Actually, I think I have his Pax levels here. Yep, right in here. This is what he's been saying. I knew we were close to it. So this is a pivotal area for gold. If gold doesn't hold here this morning and starts taking out new lows, that 33.13 as I talked about, I think that opens the floodgates for lower prices in gold. Keep an eye on that because, again, I think that those two things, gold coming down and bonds going higher, when I look at an overall environment, as a day trader, some of the things I always to look at is what could I do to help become a better executor of my strategy in an ever-changing environment? And it always came down to position sizing. What's the overall environment? Is there something happening somewhere else that tells me I don't want to be too heavily positioned on one side of the tape? I was always a two-way tape trader when I was day trading S&P, but I became a really good trader when I was able to emphasize one side a little bit more than the other and ultimately just keep myself out of more bad trades because I always seem to find good trades. So that wasn't my problem. My problem was just getting too leveraged or trading too big against something that was possibly happening somewhere else that had an impact on my market. Now, some may say you'd be able to see that within the technicals. I say, sure, but overall, I like to have an overall theme of what's happening in the market to understand which side I'd like to be more positioned on. So you have those two scenarios in gold and bonds. And when I look at equities, what do I see? I see a bullish tape. Again, so what does it tell me? And when I would come in the morning and I check my boxes, I go, okay, everything is supporting the bulls. So if I get a short-term buy signal, I want to be more aggressive with that, and I want to buy at and above prices versus a short signal that I'm not going to sell short the S&P on the first test of resistance. If I do, it's going to be a third of my position or a small amount of my position. Because the environment is telling us, barring any headlines right now, equities are still very strong. And there is a story that they can continue to go higher. And I've really been saying this a lot lately. But in a two-way tape, and it's as a two-way trader, I look at that theme behind the scenes, and it just tells me that S&P and NASDAQ, there's just not a lot of reason. If I go to the NASDAQ, it looks almost exactly the same on the daily as the S&P. I go to the Russell, which will come up here next, looks almost exactly the same. A little different, not as strong as the other ones. But ultimately, when you have all the indexes working together and you have this backdrop of what's happening behind the scenes, it just, again, helps me become a better executor in this environment. Still very much on the side of, I think you got to be more aggressive with buying dips in NASDAQ and S&P than selling rallies. I think if you get shorts, don't be in a big hurry to jump on them. I do think there will be rotations. There always is. But small on the rotations, I think, because this story to me is brewing as you're getting more doves, bonds continue to rally, and gold starting to come back off. Unwinding out of that, those flows out of gold into equities is something that I think only supports an already existing theme. That's what I've got. That's what I see. Actually, let me do crude oil before I go to you. Crude oil, interesting. Very difficult tape to have any idea of what it's going to do here. On my 60-minute strategy, I looked at this morning, and now normally I would take these trades. I still might. I have not done anything yet, but when I look at oil right now, 65.80 is a very important area for me. If we can hold above it, I think we're going back up to 69.78. This morning, again, it's always about the reaction at a level that I get. If the market is showing a great response at a level, I like to get in and get in aggressive. If a market is chopping around an area that I like, I typically will wait until I see the reaction positive, and I'd rather be in as the trade is underway versus trying to fight it if it's still figuring out whether or not it's an important area. Because everyone thinks that their price or their area is important, but the market will tell us if it is or not. So this area right now, when I look in oil, roughly 65.80, 65.70, we're sitting on it right now. If I start to see a strong response here, I will start to look to get long oil. Stop would be below this recent low, which comes in at 64.67. So it's kind of wide in terms of the stops. I actually would even be able to manage it. Maybe one of these bars I would use as a stop, but the target would come in at 69.78. Again, it's not showing a lot of signs here for me to be like in yet, but if it starts to stabilize here, I do like oil for a play. I'll drop that in the chat later today if it starts to set up. As of right now, I never like taking trades when a market chops around a support or resistance level for me. I'd rather pay up for a trade that's underway than get into a trade that's, just literally just leaking against me. So those are my thoughts for today.
Yeah, I like that. I mean, with crude and with gold, really, I mean, you get these wartime premiums and ceasefire discounts, right? And gold in particular, I find it interesting that, the dollar got absolutely stomped at 99 again on DX futures. Dollar's down, bonds are, flattish, right? Supportive, and gold's getting stopped. So it's not usually what you would see. And to me, I might be looking to buy a dip, not necessarily today in gold, but I would love to get a bit of a ceasefire discount in there, because especially if the Fed's coming out and, it was a good call out by Tracy, like kind of came out of nowhere, the dovish tone yesterday. I can't imagine that's bearish gold. So we'll see. It'd be nice if we got a little further pullback there, and I might look to get long that. And then crude, I mean, it's the same thing. You get the wartime premium, you get the ceasefire discounts. I had been long energy names, not because of this, but more because of, the fact that hadn't really caught up to, we had that growth scare and a lot of energy names got sold off. And then, obviously all of that changed and getting the big fiscal bill. And so, that's why I was in, but then you kind of sell into those wartime premiums, and same type of thing. I would be looking to reload energy names if this discount gets any further. And I agree, I'm watching this area on crude closely. I've got, basically these 64.70s to 65-ish, 65.60s maybe. Effectively where the low is, and the low dip just below there for the session. But it's an interesting spot here that could see a relief pop. So we'll see. And then, with respect to equities, I think you're right. You don't always have to be in a trade, as we've said a number of times. And so if a long is not setting up, it doesn't mean that you have to take a short. And even if you know that the market is going to go down in a given instance, or you have a strong inkling, you never know, of course, but if you have a strong inkling that it's going to go down, you don't have to take that short. You can just sit in your hands and wait for the long. I mean, you're right. This market has been incredibly resilient. And if you just look at, the chart, your 30-minute, look, the week opened on Sunday. We gapped down, traded below last week's all hours low, immediately ripped out of there, right? And then we came in, we found some struggles during the cash hours up in those 60-50s that we talked about. And then, all kinds of crazy volatility just to get a proper look below and fail of last week's cash hours low, and then ripped all the way back up, and now have taken out, last week's cash hours high as well. So it's definitely been a very strong tape. Bulls have been incredibly active on dips. Sometimes it requires some patience, right? I mean, if during this intraday downtrend, you're trying to buy the dip all the way down, it didn't work out very well. But if you're patient and wait for that strength to come in, I mean, basically what happened is like there was tremendous volume into these lows on that volatility. And then after the reversal, it got aggressive to the upside. And so there was time to get in, once this battle with, the 60-30s played out. I mean, that was kind of game over at that point. So it's definitely been a very resilient market. And now we've got basically a 2.5, 2 in a day, I guess, range, basically, because last week I mentioned, at least on SPX and SPY and NDX QQQ had taken out the prior week's low. And now we basically just engulf that, right? So, here we are. You fell asleep on the buy button. And so, it looks like we're going to get a big, gap up here. And so the rules of trading a true gap apply. It's been a few days since we've had one of these, a true gap, again, just being, where cash market opens entirely outside of the range of the prior day on a cash hours basis. And so yesterday's high was 81.5, I believe it was. I'm watching the 79 to 82 spot. And so as long as we hold a back test of, 79 to 82, then, generally the day is long. I will say, for me, the trap spot is 69 to 71, which we'll see on my 5-minute chart here in a minute. But to me, that's the play. We do have last week's high of 61.09 sitting right inside this massive 61.05 to 61.13 spot. I mean, we've broken down from this level so many times. Again, right around December FOMC, January FOMC, and then ultimately the big sell-off accelerated from this spot, the 61.05 to 61.13. So, it probably is important to sustain, this. Again, you don't want to dip back below last week's high necessarily, but what have sellers done, right? So on a daily basis, we can certainly afford to come back and hold yesterday's high, fill in some of this thin structure from the overnight. Like that wouldn't look that bad. But again, ideal to hold here 61.05, 61.13, and then your trap spots kind of right around 60.69 to 60.71. So that's kind of the big picture that I'm seeing for today. Long bias. I mean, again, just like sellers have given me no reason to do anything but rent a short. It's either a day trade or like maybe you can hold something overnight. But just a complete unwillingness to establish value and volume lower in this tape. And, while we have seen bulls get a little bit tired on rips, I mean, sellers have been nowhere on dips. Again, fishing for any kind of a lower high after a downtrend has reversed back to the upside just has not worked. So I do think, as long as you're patient and you find the right dip, it's generally going to be rewarding, until or unless we crack back through yesterday's range for whatever reason, right? And outside of like news, I mean, that's the thing, right? Like when the market is bullish, or bearish, I mean, the reverse can be true, but when the market is bullish and sellers have had just absolutely nothing, and then like some news comes out and like you lose an extra support or two, like, I don't know, I kind of tend to want to dismiss that a little bit. I want to see an organic tape. Show me a situation where there's real organic sellers outside of a news environment that are willing to drive this thing lower and keep it there. And so we have not seen that. So I think you're right that the bias is definitely on dip buying. And if you're, getting into a short, which you can on a true gap up, it's probably going to be a rental is kind of where I'm at this morning, Deli. I'm right with you.
I love that terminology, a rental short. It's great. Even somebody just put that in chat as well. I think it's it's a great way to set your mind, to have a mindset towards going against the trend, because more people will get married against trends than rent a trade against the trend, because the ones against the trend are the ones that they just keep giving you opportunities to get in. It's why I never like to be the first in at resistance in a bull market. I like to sell at and above prices to be able to get closer to my stop, then be right in at resistance right when it gets there in an upward trending market. And I'll talk more about this later with Merritt, because he and I have this discussion. I mean, that's something that is really the thing that helped me as a scalper and really defined my career. Was that if a tape was going up and I wanted to get short, I would sell as close to my stop as possible and reducing that amount of dollar amount risk. And so my position sizing could actually be pretty big near a very tight stop, versus like the first time you get to resistance, you're like sold. And all of a sudden it's just sitting there and it's just grinding up and you're like, oh God, sold some more. And the next thing you know, it just stopped out, and then it gets to resistance again and you're like sold. It's like that rent mentality, I think, is spot on. Coming into today, talk about the true gap up, the mindset and the process of coming in on a true gap up on that first retest of support. You talked about 79 to 82 area, and you've also got 6113 to 6105. That's the area that'll be coming first. Talk to us about what you look for in that in those two areas.
Yeah, so first I'm watching the open, right? And so different traders define the opening range differently. Some it might be 30 seconds. For me, I like to be a little bit slower, especially on like a true gap situation. And I'll watch the 5-minute. And so, if we open and there's just no bids above the open, right? It's just immediate trading to the downside. Then, patience in order for longs, we might be looking to test yesterday's high. Whereas if we, open on a true gap up and, the first minute, the low is put in and all we do is bid above the open, then it's hands off, the sell button and consider longs. I'm not a huge fan of chasing longs on a true gap up, but it is a long in that situation. And so, yeah, I kind of don't want to open right here in the middle necessarily. We've sort of back tested the 6105 to 6113 range. I could even see a situation where we come in and we do dump through this range real quick, maybe come into like the 6101s and then, reclaim this spot. It's just been a very firm tape. And so if we do open, I want to see if we trade on both sides of the 5-minute opening range first. Ideally, if I have that kind of time, again, I'm not usually jumping in and trading the open. And so to me, if we trade both sides of the 5-minute opening range, then it starts to look like, maybe there's going to be some two-way trading. I'll use that to, perhaps give me a clue as to what type of day we're looking in. If we only trade below the 5-minute opening range on a true gap up, then my bias is leaning towards, maybe we are likely to come back in for a back test of yesterday's high. And if we only trade above the 5-minute opening range, obviously like first 15, 20 minutes, then it looks to me like it's probably a gap up and go. So I use that 5-minute opening range. And of course it can change, but it gives me that sort of initial feel for what's likely to play out, at least over the first hour or so, until we can get, a proper initial balance set and then see where we go. But, for me, watching the 6105 to 6113 range, again, 6109 was last week's high. It almost seems like there's always a trap, right? So, I'd love to see like this low taken out, these lows taken out, maybe even come in and sweep out 6109 real quick just to, get some bears interested, and then trap them. And as long as we're basing back above, maybe 15 here, basically, roughly these lows, then I think we find a clean rotation back up to probably 30 to 32. I was using 27 to 32 into today, but I kind of like closer to 32 on something like that. And as long as this is holding, to me, on big picture, we're making new highs. This opens it up for me for everything. And then if this is lost, though, again, we haven't seen sellers accomplish much at all. The fact that we've cleared this is important to me. It's kind of like yesterday, and I'll just zoom out just real quick. So I know we're running a little short on time, but we talked about those single prints in the 40s from Friday. And the fact that we had cleared all that out, sellers did not defend that. To me, it made it a little bit more likely that once we put in this low, we were just going to rip right back through there. So this is a situation where we could come all the way down to 79 to 82. I always like to see some absorption into a low, especially if it's some nasty bearish open, or again, maybe 69.71 for a quick trap that pops back above 82. That's a long as well. So looking for one of those two. I probably won't take this personally, to be honest. That it's just, I mean, it's not that much of a pullback for me. But any of those longs, I think, ultimately resolve higher. So as long as any kind of dip down here, 69 to 71 or 79 to 82 ends up reclaiming 6109, 6113, then to me, new highs are on deck. So as long as we're not blasting through yesterday's range, I'm looking for longs.
Got it. Pharm, you're the best. I know you're not feeling great, but thank you so much for taking the time to be here today. I wish you and your family well. I know you guys are all a little bit under the weather. So again, thank you so much for being here, grinding it out with us every morning. Give my boy Pharm the thumbs up. Hit that like and subscribe button. We are on together Monday through Thursday, 8:30-ish to 9-ish, giving you guys the market environment. Never miss an episode. Subscribe to the NinjaTrader YouTube channel. Pharm, take care, my friend. I'll see you tomorrow.
See you tomorrow, Deli.
All right. Tanya, good morning. How are you?
Good morning, Anthony. How are you doing? I'm staying cool in this crazy heat wave in New York. Well, not really, because
Listen,
I did go golfing yesterday.
I know. Listen, I've got a whole list of things I need to talk to you about this morning. First is I trolled you yesterday in the chat. I said, you don't know hot until you spent the summer in Southwest Florida. We're 95, 80% humidity every day. You poor New Yorkers can't handle a little bit of heat.
Yeah, you're right. You guys, for you, it's like that every day in July and August, right? Yeah, no, like for us, it's just like this for the last few days. Typically, it's crazy humid, but not in the higher 90s, I wouldn't say. Yeah, not used to that.
And the next thing I have to talk about, because we've got Merritt up next, and I'm sure he's going to talk about this as well. Golf. Look at you going out late. I said on Twitter, welcome to the addiction. Tanya, welcome to the golf addiction.
Yeah. Honestly, I couldn't go back on it because I already had like scheduled a group outing with actually a coach and like two other beginners like me. So we had a nice time out there at 9 holes, and honestly, I was pleasantly surprised because we were actually by the water and it was a nice golf course and there was wind. I thought I would get all my hands would get all sweaty, but they didn't. So I'm like pretty happy about it, and I will be going back. I like that golf course. So yeah, I'm ready. I'm ready for it. Honestly, I'm ready to start getting really into it. I'm addicted. Like on Sunday. Yeah, on Sunday I spent 2 hours at my simulator. So
Oh boy. And Merritt said fanciest glove award goes to, I think it's Tanya. But you had was it a pink glove with the green? I saw it when I was, yeah. Like I said, welcome to the addiction.
Yeah, that was a birthday gift.
Oh, that's right. Yeah. Okay, cool. Get ready, Tanya, because it's coming, and we're going to see who your partner is going to be when we have the Crudele Traders Invitational Golf Outing. You're gonna have to step your game up for this, because there might be some wagers put on this. I mean, we are traders. I mean, gets interesting when we all get together and play golf. So I'm excited that you're going to be a part of that.
Okay.
All right, let's talk markets. So we had a day yesterday, right? You had a really great trade in NinjaTrader Live. Yeah, and now we come in this morning, and Pharm talked about a true gap up. What do you see this morning on the charts?
Yeah, I'm honestly here on the weekly chart, and I'm like just looking at how we basically had a weekly range already in the first day and a half of the week, because yesterday we took out the last week's low during Asia, and then today overnight during the overnight session we took out weekly highs, and so far we're spanning like 700 points on the NASDAQ. What I'm looking at and I'm seeing here is like I'm gonna gauge whether or not we're gonna hold this high, which I doubt. I honestly think, with the current type of conditions we're in, it's more likely than not we're not going to hold up here at these highs and continue up from here. I think it's more likely that we'll retrace. I would like to see perhaps this get inverted. So basically the pre-market lows to get closed below. So 22,250s. And then I would look for just like a retracement to probably 50%, or I would go for, honestly, maybe 50% of this. I would probably go for like 22,133, but you could hold for 22,000, honestly. Because I'm not seeing that we're not, as much as we're not having sustained downside, can't be buying breakouts at the tops of ranges, or I can't be buying too high. So I'm more likely to want to go short in this kind of environment. And also I'm definitely noting today, and I'm probably going to wait until after Powell speaks or during his speech, because he's speaking at 10 a.m. today. And I just know during those speeches, it gets wild. Like the whole price action gets really crazy. You could whiplash, and I'd be careful if someone is in like in a position leading up to it, just because it kind of tends to act like FOMC when he's speaking, with both sides get taken out. And I'll be prepared for a lot of volatility there. So maybe that will give us some opportunities for some short downside. I wouldn't be really surprised if we come back all the way, fill the entire gap up from yesterday. That's what I'd be probably looking for, actually. So like the cash where we closed was here on yesterday, right? So I'd probably look for us to get back to 22,073-ish. Yeah, honestly, I think I'm coming in with a bearish bias, and because I think that we're extended at this point. I don't want to be buying. I can't really think about people that want to buy. Do you want to buy at these prices right now? But hey, if we do end up going up to the upside, there's not much stopping us from going back to all-time highs in the coming weeks. I just do think that we can retrace within this in the meantime, just from what we've seen as a theme throughout these past weeks. Like we take out a high, and then we come and retrace, take out a low, take out a low, take out a high, take out a low. It's just the type of market you got to be accustomed to right now. So that's basically what I'm thinking about. I'm definitely preparing my mind for 10 a.m. I'm marking that out on my chart for when he's going to start speaking, because you can easily forget, honestly. So well, I like to do that. I'll have
Paul.
We mark times and price levels, and also I'll mark out time levels, especially if there's news coming up.
Yeah, we don't expect Powell to say anything too much, but you're right. I mean, who wants to make a bid or an offer, quote a market when he's speaking, and, God forbid the market, overreacts is really the word, to something that he does. Couple things. One is, look at Kane. Kane is already trying to get on Merritt's team because he hears he's pretty good. He's trying to squeeze an edge in on Chad. Come on, Kane. We're going to have a talk about this tomorrow. And if you want to be partners with Merritt, that's fine. Just bring your wallets, because I'm going to find a partner and maybe we'll have a game here. But aside from them trying to make a deal on chat, let's go to what everyone else is looking at today in terms of the market outlook and where they're voting. And it's 54% bullish, 21% bearish, 24% neutral. So the least amount of people bearish. What I've noticed is a lot of times when when you're bearish and it's the least amount on the chat, you do get a mean reversion day.
Yeah. I'm not gonna lie, those are my favorite. Like when I look at my own chat, and I feel like when sort of people are offsides, it tends to signal a pretty good reversal at times. Those are probably the best reversals. And that's a debatable topic I spoke with other traders about because there's a whole psychology about that. If there's a strong reversal and then a lot of people are caught offsides, I think that's the best type of play out there. But then other people are saying like, oh, there's a reason why most people are bullish and there's momentum in the market. The market hasn't really proved to me even momentum on the upside after taking out highs. It has after we take out some lows and especially after like Pharm was saying on some like news headlines. It'll take out and wipe out some lows, take out some stops, and then immediately take out the high that took out the low. We're not putting any lower highs, that's for sure. So I'm gonna stick to most of my bearish bias. I'd like for us to take out those pre-market lows with a nice displacement. Then I'd probably look for continuations lower. And yeah, I mean, for the golf, I'm happy I have now something like to actually work towards actually. Like that'll be my goal to show up my best self at your tournament. So I will stick with this. I'm even looking at, I mean, I'm gonna go to Croatia during the month of August. I'm already looking at golf courses there. That's how you know.
Oh, that's the true sign right there because I'm always looking at golf courses, no matter where I travel. Shai is saying Powell is testifying before the House today on monetary policy, so it's from 10 to 12. Just for clarity on that, everybody,
Great.
it's a semi-annual
Okay,
event. Tomorrow will be the Senate at the same time. So the thing is, you probably have to expect volatility throughout that whole time because who knows what kind of questions they're going to throw at them.
Okay, great. Good to know. Yeah, I know. I mean, anytime I see it on the calendar that's Powell speaking at 10, I honestly don't like it. I don't love it, but yeah, I'm expecting volatility during that time. It's not that I'm not saying that I'm not going to trade during that time. I think it's probably going to be really good opportunities. So, just gonna prepare for afterwards. It's kind of like almost like a news release to me. So, yeah, end up seeing what it goes from there.
Any favorite you have? Is it more leaning towards NASDAQ shorting today or S&P?
That's a good question. Let's check out. I remember yesterday NASDAQ took out the lows before S&P, and then we had a divergence there in the morning. But then later in the day, I think it was stronger. So honestly, we keep having those types of rotations where it's kind of difficult to gauge which one. Honestly, on the upside, if I always, or the downside, if I'm kind of neutral on both, I always like to go with NASDAQ. It just goes a lot faster than ES. But if I see like a cleaner swing high formed on ES that I could easily put my stop at that swing high, then I'm totally fine with shorting ES because it honestly tends to respect the highs that it puts in after it manipulates, while NASDAQ might sometimes, do a double manipulation or something like that, or really retrace super deeply so that if you don't have your stop at the swing high, if you're shorting, it could stop you out if you're kind of really being skimpy on your stops there. Yeah, so here, let's take a look. It looks really, they both
NASDAQ
look
likes to
really
do
similar.
NASDAQ things.
Very true, very true. Honestly, it looks super similar on the 4-hour. If I go to the hourly, this is where yesterday was, NASDAQ took out this low at 10 a.m. And ES did not here. And then later on in the day, with those headlines, we took out the new low of day and then we surged up higher. Let me just see which one reached this high quicker. I think they were probably reached at the same time. Let's see. Actually, ES hit this high much quicker. So I'd rather than short NASDAQ because it does seem as ES has been taking out highs faster. Yeah, I'd rather probably short the NASDAQ today. And we'll see if it works out. Like I said, yeah, I'd like those lows to get taken. If we kind of hold this up, I mean, I'd be pleasantly just surprised, impressed by the index if we do. But I really, oftentimes when we see like gaps like this, they tend to get filled. So I'd like to see us fill some of that gap up that we made from last night.
Yeah. Especially in this market environment, you would expect a little bit of push and pull on these highs, but again, the market loves to show us ways, show us something that we don't think is going to happen, but it happens anyway. But nonetheless, everybody, thank you again, Tanya, for joining us Monday through Thursday. Tanya is on with us from 9 to 9:15. Hit that like button for Tanya, and of course, she streams with us. She streamed with us yesterday on Monday. Tanya, keep working on that golf game, and I will see you tomorrow.
Thank you so much. Good luck and good trading, everybody.
All right, everybody. There was a book called Tuesdays with Maury. You may have heard of it. It was actually a very, very good book. But on the NinjaTrader Network, on Tuesdays, it's with Merritt. Next up, it's Trade the Open with Merritt Black. I mean, you see people fighting in chat already to become partners with you. I mean, I'm gonna have to have a talk with Kane. He's working it. He's trying to get in my pocket. That's what he's trying to do. He's like, oh, well, maybe if I partner with Merritt, I could squeeze some money out of Deli. That's not right, Merritt.
He's a trader, man. Trader's gonna trade.
So
how you doing?
How you doing, buddy? Everything good? I'm good.
Very good here, man. Very good.
Great. Yeah, I mean, we talk about this true gap up. First off, any positions on right now? Are you doing anything?
Yeah, I'm trying to pick a bottom in gold. What else is new?
Oh man, I love it. I love it. So, gold, it didn't take out that recent low, and that's something I was talking about. The 33.13 was that recent low. It defended it, and now you're seeing a rotation off of it.
Yep.
Walk us through why you got in gold.
Yeah, it's an aggressive play. As you can see from the rotations on the screen here, we're kind of starting to hold below the lower one standard deviation on kind of this VWAP framework here. So it's an advanced type play, as we would call it for NADRO speak. Cumulative delta is pretty fickle, pretty tough to trust consistently in gold, but as we approach these lows, we saw a pickup in the amount of aggressive buying. We can say that much is true. How much it impacts the market again on any given day in gold is a little dicey, but that signal is there, and we're pushing some real extremes, -2 standard deviations across a couple time frames, the weekly, the monthly. We hit weekly VWAP, quarterly VWAP as I kind of step through the time frames. We just don't have that structural profile-based return to some form of value yet. And I've got that around 33.40. So if we can start to get I'm almost like in the trade before it's like really, really setting up. But if we can start to hold above 33.40s, I'm going to press it. I'm going to add to the position and see if we can do some damage here today.
That's important that you talk about. So you have a starter position. Is that what you call it?
Yeah, pretty much.
Getting
yeah.
in. Is it? Yeah. And part of this is to feel the tape a little bit, be in with skin in the game, make sure that you're able to participate in the move and see how the reactions are. Like, walk us through why to get in something early, because I think it's important for traders to understand if you say you're in a little bit early, why you then did it.
Yeah, I think that you're spot on. This is something worth really, really clarifying for folks at home. I'm not in early. I have plenty of confluence across multiple time frames. It's a real trade, a real mean reversion, NADRO style trade. Okay. I I often like to see what I call structural support to get really aggressive in a trade, to really kind of push it, maybe add, to really feel like I can hold a core position confidently rather than, or as you see me all the time on the stream, scaling out, just, pretty quickly, kind of nickeling, diming and stuff. Um, so that when I say I need structural support, that's going to refer to like volume profile, market profile, that type thing. And so we have a multi-day balance that started on June 6th and ended when we gapped up out of that on June 12th. And the lower edge of that is around 33.40. So that is a spot where if we can start to get above there and hold, it's just extra good, extra confluence. So it's not that I'm look, I was actually having this conversation with a trader yesterday about starter positions, feeler trades, getting a little bit on so you can feel the tape. Look, I was around a lot of traders in New York and different places who like to do that, almost needed to do that to get into the flow with things. I've never fully related to that. I've never thought that I need to have a position on to feel the tape. I can feel it just by watching it, as if I had a position on, the same amount of intensity. And I think that either I have a good setup or I don't. So I want kind of a real position on or not. Now, there may be times where I do like I'm doing here, where I have planned ways to add to a position if I get extra confirmation, extra confluence. But it's a good trade, but an aggressive play in terms of timing it up intraday. That's really the best way to put it.
No, I like that. Thank you for explaining that. I'm actually someone who does like to put on a feeler. So, for example, I've been looking to buy crude this morning. I'm waiting. I said 65,
Oh, I
80-ish
tried.
is an
I
area that
scratched
I
out
like.
of it. I had it, man.
Did you?
Oh, yeah.
So it's one of those things where when we get closer to my risk, if I'm not in it, because the tape itself has not been really conducive. It's not the crude oil market has not been the easiest trade, let's face it. But when
Agreed.
it gets close to risk, sometimes I'll put on like a 1 or 2 lot and risk a fraction of my risk to feel what it feels like to be in that. Because sometimes all of a sudden it'll start going my way or it's just grinding against me. And I'm like, dude, I'm so glad I'm not in 10 right now. You know what I mean? I think that's something that I do. And so, again, like you say, you have built a skill to feel it without it. I have built my skill to feel it with a small position. I mean, it's also another reason, honestly, it's like I don't use micros almost ever, pretty much never, unless I want to like have a feeler situation. So I look at a micro. Sometimes I'm like, you know what? I put a micro on and I'll look at it and I'll be like, you know what? I'm learning from how the tape is reacting to this area. I personally like that. Again, that's just something that suits me because sometimes
You're not alone in that. Like I said, I know a lot of guys who feel the same way.
Yeah, and I think that it's just a matter of, okay, I know this is a look that I want, and I am deciding that this is where discretion will come in. So, like, because crude has been sloppy and not conducive to my environment, it's when I step in with a feeler. Like, if the market's giving me what I want lately and I'm hot, I'm not putting feelers on. I'm either getting in or I'm getting out. But when there's a market that's, like, giving me signal after signal, like, I look at my last 3 signals in crude, and they all were like almost stopped out or near stopped out. And then like maybe you get 1 out of 3 targets and you're like, dude, this thing is just, you know what I mean? It's a torture chamber. So I'm like, okay, let me do feelers there. So again, it's the nuance within the execution because that's what it comes down to. You and I talk about this each and every week. I took enough of your time this morning. Thank you for explaining that. I'm glad to see you trading gold. Tuesdays with Merritt. Did you like that Tuesdays with Maury? I don't know why that just came to me
actually,
this morning. I was thinking about
made me
it.
chuckle. Yeah, makes me think of another book. You remember Flowers for Algernon? Did you read that?
Yes, I did not read it though, but I remember that book seems very. I can remember it. Was that
Yeah.
another
Same era.
childhood like kind of? Yeah.
Yeah.
All right, everybody, make sure you go check out what Merritt's doing with Apteros. Follow Merritt on Twitter. Hit that like button. Merritt is with us every Tuesday, and I said this to you last week. People love watching you here on Tuesdays, Merritt. More people stay for years. They stay in almost the entire time you're on, which is really, really good. It's because people are getting a lot of good content from you. Continue to fire up that chat with questions for Merritt. I know he loves that as well, and he's always great for answering that. You're the best, my brother. I'll be watching. Thank you so much.
Cheers, man. See you.
See ya.
Get ready for October. You're going to need it. You got to hit him with stuff like that as he's signing off where he can't respond, just so you get that last word in and he's over there like, but they've already pulled the hook on him. That's take notes right there, guys. That's how it's done. Put me back in. Oh, me. Okay, well, we have exhausted the list of books I can name drop. Let's talk markets. Oh man. Hey, they did put him back in just to see him stand up. What an idiot. Wedding crashers. I don't know why you can't trust the delta in gold. I do not know why. I could talk more about currency markets and why order flow is messed up in currency markets a lot of times. And that's because you have so many different exchanges, right? You have Forex, you have all these different places, and then we're trading here on futures, right? And you have spot, cash. So you don't have all that market's flow, if you will, all that market's orders happening on one centralized exchange. So that would explain that. But in terms of explaining it for gold, why it's kind of wonky at times, I don't know. I really don't know. Now, I will say this, and I tell people this all the time. I've developed ways of reading order flow almost, exclusively through the use of cumulative delta. And so when I say something's wonky, that candle's not correct. That's not correct. Oh, I clicked. No. There we go. I clicked the next month. For me, when I'm saying, I read order flow a certain way, and there's certain patterns and signals and things that I've come to understand and know and teach people about, and that doesn't mean that you can't watch gold's order flow on the cumulative delta tape for the next 6 months, and you don't find truths about the way that order flow tends to behave, the way it tends to work with certain patterns and different things. You can discover your own edges with order flow. It's what's so cool about it. All right, so I would love to bang into crude long, but I'm a bit uncomfortable with the short-term trade location, right? I'd rather be in from 20 cents lower. Crude and gold both are in kind of confluent spots where I'd rather have some long risk on and play for a bit of a mean reversion despite their both of them having large sell-offs recently. I want to keep an eye on gold as well. Got Dua Lipa stuck in my head this morning. Ding, ding, ding. All right, so we'll have to wait for a down rotation to try to pick a spot in the crude. We are open in equities. You don't wanna see me dance somebody. Mm-mm. Nothing too exciting going on in crude. I have that on another monitor. Looking like it might make a run at stopping out some shorts. But it's kind of very sideways since that overnight high. All right, so gold, bunch of sellers came in as soon as we tried that long again. We're holding kind of an imbalance down. Still like the trade location, but it's aggressive going against an imbalance down. Good morning, everybody. Pop over to the NASI. I don't have a main hypo for NQ. The goal of NADRO style analysis is to identify where there is clarity, not to come in each day and force clarity, to try to say, okay, I'm going to trade this market. What's the opportunity? It may not be a good one. If I were to do a top-down analysis on NQ right now, obviously, as you know, since we called it a long, long time ago, when everybody else was losing their heads, I was talking about bottoms and was talking about a good spot for long risk and was talking about a move back up to, 20, 22,000, 200, like this kind of area that we're at. or just 22,000 in general. And then from there, you know, it's not strange at all to think about kind of running some stops at that kind of weakish high of last year's high and this year's current high. That would be a very logical place for the market to go run. As I talked about in my S&P kind of write-up from late last week, we've gotten to a place where the market's reached that destination that I mentioned, but it's also stalled out, right? And that is a bullish factor, stalling out like that rather than finding sellers once you get to kind of a target area. So the market was unable to do that. And sure enough, what we've seen is that bull zone hold that I had in that write-up, and we've pushed to kind of highs outside of that stall, if you will. Bringing it back more into today, now we've kind of reached a destination on the quarterly. Last quarter's value area high, kind of poked our head above that. It's the +2 standard deviation for the monthly, which is also kind of more bearish mean reversion type spot. But it's a breakout, right? We're in the position that any trader is in on any time frame, whether it's a scalper or a swing trader. You have a breakout. You monitor for continuation versus reversal. We don't know which is going to happen, but we have lines in the sand for that. So to me, a nice kind of medium term over under is around 22,100 up to call it 22,200. That little 100-point zone right there that's the point of the breakout from this almost month-long balance now. You know, the whole, month of June has been sideways through there, and that's the upper end of that range. So you don't have to overthink these things, right? It's what I do is, we have 10 laws of market dynamics that shape where price is relative to these established balance areas and therefore value areas of those balance areas. And we have rules for understanding in a framework-based way what's bullish and what's bearish based on where we trade relative to those areas. And that's NADRO in a nutshell, right? And then we have the long-term VWAP stuff, which shows us how extended we are from means and whether we're trending versus rotational, what state the market is in across different time frames. And you put all that together, and it's every single day. It doesn't give you an A+ narrative-based trade. It doesn't, that's just not there every day. All right, NASDAQ's still in that tight little range that it has been since before the open. Gold is still pressing lows. Crude's still just dangling a little carrot for me to buy it here. Play a little breakout style entry. There it goes. There's the little pop. But I'm going to refrain. Good luck to you, Gapsy. Don't try to make it all in one trade or one day. Obviously, the consistency rule helps people not do that. They're not motivated to do that as much, but still have that marathon, not a sprint mentality, and just wait for where you have clarity. Take your best trades, manage risk the absolutely best you can. Someone asked earlier, I'm just having a memory of they've been doing good for a year or two, and now they're kind of flatlining in their performance. Without going through your stuff and understanding you as a trader, obviously I can't speak to maybe the whys behind that, but yes, it's normal. It's absolutely normal. I have, well, look at the my stream last week, right? And we're continuing that streak into this. We're 0 for 2 today, right? We all have periods of underperformance, but whatever this account was up, I forget the number, 20, 25K, whatever, over the 13 streams that I posted the stats for. I think last week I lost like $1,200 or something, right? So it's as long as you don't let one trade, one session destroy your career or your progress, right? You live to fight another day, and you put yourself in position to show up and be your best and put good risk on and flip a coin. Let the results take care of themselves. Let and then you don't overmanage winners and shoot yourself in the foot there, because when you do that, you don't come out of the drawdowns, right? You just kind of P&L focused, and you're trying to get even for the day or up $5 instead of down 600. So yeah, I'll shut up. Well, Pilar, that should be pretty self-evident. 1 second. When to switch from MNQ to NQ? It's a super simple question. It's whenever the risk calls for it. Whenever your trading is growing and you're sizing up to the point where, depending on if you need to be able to trade multiple lots, once you get to 10 MNQ, if you're all in, all out, that's an immediate commission saving benefit boost to your trading to go to 1 NQ, all in, all out, right? However, if you're like me and you really depend on scaling out to be a really big part of what you do, I'm not sure if my stream is cutting out at all, but I am getting connection loss back and forth here on the platform. I'm not seeing that on anything else, so I think my internet's good. So anyways, yeah, so if you need to scale out, that's a little you have to just simply get to the thanks, Michael, point where, let's say, if you need to scale out half of your position, you got to get to where you can risk with 2 NQ. That's all, right? So as long as you can handle that, then you're going to save yourself a lot of commissions and everything by trading less contracts, right? People who go and are trading like 30 micros, guys, please do not go trade 30, 40 micros. That is insane from a cost perspective. You need to, I don't care if you say you really have to have that much flexibility. Nobody needs to be able to scale out of a trade 30 times. Nobody. I don't care if you think you do. If you think you do, you are wrong. Being able to scale out 3 times is fantastic. Break things down into thirds. It'll actually make you better, because what I see a lot of times is people who emotionally just takes them off, and then they've already taken some off at a certain area, and then it goes a little sideways, and they're taking some off. It'll make you more methodical. It'll make you more intentional in your scale outs when you know that you only have 3 to scale. So it's probably a really good thing. I don't want to forget this 3340 area, so let's highlight it, make sure we remember. Yeah, my AGM students, desk traders, I get onto people all the time about scaling, and it's almost always emotionally in the same region. When you get to an area, you're using that, whether you're using limit orders and scaling into strength, or you are waiting for an adverse type of momentum shift once you've gotten a favorable excursion. Regardless, once you've done that, you've done the job of scaling out into that region. And so there shouldn't be a bunch of other executions and add backs and a bunch of different things in the same region. Obviously, hey, you guys all have, some your own process, and there's room for things like order flow and having an additional discretionary type call based on what's happening. That's a different topic, right? For most people who are just price action, looking at the bars and whatnot, I've seen enough traders trades and behaviors and talk to them about it to know that it's a big area for improvement for a lot of people, and a lot of people don't realize it's an area for improvement. So we haven't made any money yet today, but I'm very much comforted by the fact that if you kind of step back and think about what I've been trying to do, initially long in this region, tried it again, somewhere around in there, and now this kind of like wait for to see something like a better looking bottom after kind of a prolonged move down. If we keep picking good spots like that, you know, you're going to come out ahead as long as you have a decent thesis and then are able to step away and stop forcing it when the thesis is no longer there. Looks like we're going to get stopped. There we go. Fast trend. I wouldn't call it fast trend. This is quite a muddy, slow tape for gold. I'll plead the fifth on that, Mike. I'll say this. I think a lot of people get sucked into some really short-term tools with flashing lights and bells and whistles and things like that. And I've never seen personally, right? I've never seen that work very well for very long for people to get just so close to the shortest of time frame world and try to compete with those machines. It's a really tough act. And look, you talk to some other people, right? And they'll say, you can't do what I'm doing, right? They will absolutely tell you that. You can't scalp, you can't make money scalping, blah, blah, blah. So not everybody has all the answers to everything. I'm just telling you what I've seen, or in this case, what I've never seen. When I work with traders, whether it's through our mentoring with Apteros or on the desk, a lot of times if they're coachable and kind of listening to me, and it's not just like I throw out blanket advice. It's custom tailored to what I'm seeing from their behaviors and their performance and their stats and everything. A lot of times the move that we end up making is a move of simplification, of stop trying to be a superhero in terms of timing trades with low time frame type tools. It ends up being a progression of trading less, of simplifying what they're looking at, of getting a little bit more rules based on some of the execution, and allowing for them to really trade their best ideas more confidently and whatnot, and without a bunch of stuff in between, which, as we know, is the real killer of trading. It's all the stuff in between the good trades. The old making money is easy, keeping it is hard. So look, we've timed up this gold long really nicely a couple times, right? Waiting for a nice counter rotation. This is use of the R in NADRO is rhythm. And we've been nicely in rhythm for our entries and gotten initial immediate favorable excursion. We just haven't been able to get the follow through yet, which is totally out of our control. I know that this market is in a prime spot for something of a bounce. Heck, even short term, a bounce up here to 3320s, 33 mid 3320s is just easy for this market to do, and that's not even getting started. This trade gets started in a big way on a hold above 3340, where like I said, we can add to it and things like that. Pretty quiet though. Well, Paulo, sometimes our strengths can also be a weakness. And if it's very easy for you to get out of a position when things aren't going your way, that's great. But there could be a learning opportunity for sitting in discomfort when things are kind of working, kind of like my trade right now, right? I could talk myself out of this. I could use recency bias of how the past couple haven't followed through and worked. But I'll tell you, the money to be made in trading, obviously once risk is taken care of, is, and I'm not a huge Jesse Livermore fan, but it's in the waiting, it's in the sitting, right? And I think especially when you have a position on, you got to be able to handle the discomfort of risk on. And so just simply striking that balance, right, between a wonderful thing of getting out of the way when things are not looking good. But when we're uncomfortable and we're in a winning trade, we could pretty much always come up with a reason why things don't look good. I could say momentum just shifted right now. Doesn't look good. It's an aggressive play. Doesn't look good. We've stalled now for 1, 2, 3, 4 bars in a row. I'm just going to take it off. Let's just pay. Can't go broke taking profits, right? Yeah, Jay, absolutely. That's one of the big benefits of scaling out is giving you just making it a little mentally easier to then shift gears and kind of sit in it a little easier. Quite frankly, traders like Kane, who are able to really sit like all in, it's very, very impressive and very, very rare. Absolutely, you can go broke taking profits early. Absolutely. Because, guys, the losses are coming. I can guarantee you the losses are coming, right? I'm on a losing streak right now. I'm in a drawdown right now in terms of my time on this stream, right? So if you don't make enough when you do get those winners, when the market is easy, but you don't allow it to be easy because you overmanage it, the math doesn't math. Not going to work out. I really think of winners, quite frankly, like room for my future losses that are coming. I really do think of it that way. You bump up that equity curve just so I can go do my job and lose a little, lose a little, lose a little, and then bump up that equity curve so I can then go have those losses that are not threatening my equity curve. That's really kind of a mentality that I have that I don't think I've really expressed that out loud before. But that certainly is there for me. You could go too far with that mentality. I don't like when I hear people who get too loose just because they've got some house money. That's not what I'm talking about here. News incoming. Don't love the head fake above and then the turn. Because if that's happening and we are able to press lows, that's why you saw me tighten the stop, news coming, and then just the overall almost kind of done with an up rhythm type move. But anyways, if that is going to be a swing high right there, which it's looking like it is, then we might be settling into something of a painfully slow, fast trend here in gold this morning. A fast trend is a definition that we use in NADRO to where the market is not doing what's more typical for a normal paced trend, which is, as we see at the highs, if you look at I'm not going to take my hands off the keys right now, but if you look at the highs around 8 a.m. my time, that's the lower -1 standard deviation from VWAP. That's a normal imbalance pullback. That's a normal trend behavior. If you start holding swing highs well below there, that's a fast trend down, and vice versa for holding swing lows well above the +1 standard deviation. That's what we call a fast trend. But for it to be a true fast trend, you really need energy in a market. You need the delta really showing you that a side is dominating. You need a frenzy in the tape, a certain speed of the tape. And we just simply don't have that here in gold, which is why I am sticking my neck out a little bit and looking for this bottom in what my frameworks tell me is a very likely mean reversion, risk reward asymmetry situation. I have no idea what's going to happen. I just know at certain times which way the risk reward is skewed, and I try to position for it. My trading is very sophisticated, but it's also simple at the same time, right? You can really dumb it down, and I can explain it quite easily a lot of times. Understanding, reading narrative, as we call it, the N in NADRO, it takes months and months of like hardcore work to be able to start to do well. And it takes years to master, I would say. Yeah, Luis, well, I recognize your name. I would assume you would already know the answer to this. But we talked about this a little earlier on the stream. Gold, not so reliable on cumulative delta. It's usable for sure. It's usable. But you take it with a bit more of a grain of salt than you would a lot of the more standard equity products and whatnot. Crude oil when it's behaving. Jimmy Kaggs says silver futures are selling off. Bottom. You tell him I said so. Bottom. Silver is kind of in a spot like gold. It probably, let's let's see, quarterly VWAP, monthly -2, a little bit past the yearly IPB. Silver is almost to the yearly IPB at a quarterly IPB and almost to the monthly extreme fade. So a little bit of differences between them, but yeah, that's a bottom, Jimmy. We're buying them if you're selling them. It could go a little lower. Like I said, it's, like monthly development value low for silver is at 35.04, and we're at 35.36. Pretty small, on a bigger picture basis, but it's in the vicinity of a big bull zone for me. And so is gold, which is why I'm in this here. NASDAQ is still in that sideways range that we've talked about. So therefore we've not been flipping over to it and putting energy and effort and attention and risk on it. Just from a price action perspective, since I'm bored, we are struggling to get back above this region. So this will be an LVN if we were to put up a volume profile for this session, from these highs to this. And then, spoiler alert, if you were to make this a longer time frame candle type thing, right? Let's just say I'm just going to do it, just kind of generically for this region, right? And let's say there was this candle, right, in this region. And then this candle, right, for this, whatever. Well, guess what? Isn't that your FVG or whatever, or that type thing? But it's an LVN, right? If you use profiles, because the profiles are going to show. In fact, I'll draw a profile. There it is. This whole little zone right here is exactly kind of what I was referring to. You know that these lows are here, you know that these multiple highs are here. And so you have a very low volume area because the only thing that traded through there was that. This year marks my 20th year trading. Which I do, because I was super diligent and serious about it. If you allow me to count 2005 as a year that I was trading, when I was just trading with a very small account as a senior in high school. '05, baby. Got any other '05 graduates, high school graduates, having a 20-year reunion this year in the chat? '05, LOL. '03, okay. '07. Not Michael Burry says, I was born in '05. Nice. Got a '06, couple '06s. '88, I love that. '91. I was born in '86. Okay, so far Dave takes the cake. We had Jack and Dave both the oldest old timers here. We had a 1965. That's awesome. Do you remember the 1900s? Yes, so Chuck says 99 there. I was about to talk about 99. The Y2K bug. I remember, I think I was in about the 6th grade at the time. I just gotten into trading. I don't count those years yet because I wasn't trading, but I was already studying trading as a 6th grader. I remember staying up for that New Year's Eve, and I remember exactly where I was laying on we had a couch and then a love seat. I was on the love seat. We were watching the ball drop and seeing if we had total chaos. Also, that reminds me of a great commercial, the old ESPN commercial for the Y2K. Go pull that up on the YouTubes if you haven't if you've never seen that one. It's hilarious. You got Mark McGuire running around, some of the staff. Those old Sports Center commercials were cream of the crop. All right, so back to this trade after our trip down nostalgia lane. I'm going to be very careful starting right now, kind of looking for a scale out. Yeah, I'm glad some of y'all watched that Y2K. ESPN Sports Center Y2K commercial. Just YouTube that and you will enjoy it if you're a sports person. If you're a nerd, don't bother. We're all nerds here, though. You know what you call a nerd with a sense of humor, right? A husband. Thank you, Milo. Okay. All right. We have to talk here. I know we're getting a little off topic here today. I hope you guys are okay with that. I'm usually the serious marine trader, but while we're sitting in this trade, we can chat a little bit. Are you guys up on the these two Italian disco guys? Are y'all on this? You want to talk about a vibe? Andrew's on it. I mean, it's like trending on X. I mean, not like trending, but it's all over the place. And they are it's just two dudes, and they're just like either in like a kitchen or a bathroom, and they're spinning some records, and it's this old school Italian remix disco. They're not Italian, okay. And they're wearing like, they've just dressed themselves from the thrift store. It's just, and they're just like got the cigarette and like drinking Campari, and they're just like, and it's, you'll just have to see it. It's yeah, just do a little search for Mind Enterprises. No, I'm not talking about, I know Night at the Roxbury. I'm not talking about that. That's not Italian disco either. That's like, what is love? Baby, don't hurt me. That's a little different. That'd be a good mix with some Italian disco. All right, so we are watching for a scale out. I would love to not scale. I'd love for this thing to zip through here, and then we could really try to press this and hold it. But most likely we're gonna have to scale. Yeah, they seemed pretty authentic to me. This is a 300 volume chart. All right, that might be the sign to scale. Now there's a passive seller holding that little bit of buying. They lifted it, but so this is, yeah, this is like classic kind of short-term top potential here. Shocker, it's at the minus 1.0 standard deviation from VWAP, the same place that held the major rotation up into 8 a.m. Half off. We scaled out. The proverbial we. All right, let's see here. Great scale out. Let's see if I can. So think about what think about what you guys watched right here from the time we got into this position, right? We tried it here. We were in. We scratched or stopped, whatever it was, got back in. Think about everything that happened, and then think about what it looked like right here. And if you can recognize the difference between this potential top, this wick and potential top, this little stall out, this turn, this sharp turn, this turn, maybe this turn, this turn. And where did we scale? We scaled at this one. So there's a lot of skill in what we call short-term skills in understanding the believability of a potential turn. A turn, right? From market moving up to market moving down. And the same goes for, where we put risk on. I told you earlier I was very pleased with all the spots we put risk on. And if you can time markets, right, which some people will tell you is impossible, which we're shattering that on this stream. And you manage risk and you maintain objectivity. I think that's a huge part. Once you have the skill, if you can't maintain objectivity throughout all this, when we were saying the tape is slow, it's not really working well, we are going against this downtrend, blah, blah, blah. How many times can you talk yourself into coming out of this, right? Versus a really, really good process-driven, high-quality scale out. Now, not all scale outs need to be, top ticking the highs before a retracement comes. That's not what it's all about. If you have a really good reason for scaling into strength right here above these little highs, then fantastic. That's a good place to scale. We talked about that LVN being right there and whatnot. So, I see just so much room for this market to trade higher if it can stop trending down. I have no idea if it can. That I think it's appropriate to be a little bit more stingy with the scale, and that's what we did. Flipping over to NQ. Kind of a spot where you could play a short, but I'm not going to do it because it didn't take out these highs. But I have, my little algo that I have that fires off turning point signals. It's firing off a short signal in this region. I don't really like the order flow sequence. I like how capitulatory this got into that high and then the kind of the fizzle out, but a better stop run element would be better versus getting above this region here and holding it. You could play the breakdown, right, on a drop through here with a tight stop. At minimum, would be looking to scale into VWAP in case this inverse head and shoulders pattern were to play out. But that's the closest today I've come to putting on a position in the NQ, but don't love it. What's crude doing? Pushing lows. Sellers pressing. hard. It's overall, if you see over here on the weekly, this little, it's kind of like a bear flag, right? It's just right at that tipping point, and they're really trying to crack it. Yeah, HK, I agree with that view. Not a trade for me. Looks like gold is going back in our favor a bit. I just noticed the P&L number increasing over there. Friend 1010 says, I guess I'll be listening to Mine Enterprises all week now. Haha. Rachel, we have a community of students, and then we have a prop desk. So if you're a part of one of those two things, then yeah, we have a Discord and whatnot where we have a nice community of high quality people. Apteros, Apteros, apterostrading.com. You can find out all you need to find out about us. You can always email support@apterostrading.com. with questions or concerns. Good morning, Ferris. I can't get this. I'm trying to bring over a browser window and I can't bring it over. It's like because this Parallels is in full screen mode, it doesn't allow me to bring anything over. I don't want to have to redo all my charts. I was trying to show you the disco. I wonder if links work in the chat. There you go. There's one. Here's the other one I like. That's the really important stuff right there. You want to talk about a vibe? There you go. Those links are in the chat. Yeah, I'm a newer Mac user, so I don't know all the ins and outs of all the different Windows, whatever you call them, virtual machines or whatever. Oh, our Savannah's letting me know the links didn't go through, so I'm going to send them to her, and she can send them. No, I'm using Parallels. Savannah's coming in hot with the disco, the Italia disco links. There's one. Not sanctioned by NinjaTrader, by the way. No, there's nothing bad. Very important links, guys. There's just something about it. It just makes your day just watching those guys. That's what I want to see Crudele doing. When he comes on in the morning, I want to see him. That's what I want to see. Oh, I'll win the golf. Actually, there is another guy who so Crudele did the golf event twice, and then he hadn't done it in a couple years. Jim says he's blasting it on full volume. There's another guy who's like a legit scratch, if not like a plus, who also comes. Shout out to Warren if you're out there. Oh yeah, coherence mode. Yeah. You know, something was making the mouse do really funny, weird things. I forget which mode. I think it was coherence mode that was doing it. Or no, I'm in coherence. It was not being, I don't know, dude. I don't know. One of them was screwy, but I've got it set in a way that works well. I played Friday and shot a 77. I was even after like 14 holes, so let it get away from me. Got overly aggressive when I was in some spots I should have just punched out and played for par or played for bogey even. You know, yeah, that's like a risk management analogy. I agree. I think one thing that is really, really enlightening about playing golf is, in terms of relating it to trading, is how you're going to have bad shots, right? It's simply too hard. Even the pros, right? The absolute cream of the crop, they hit terrible shots. They shank the ball. Scotty Scheffler shanks the ball sometimes, right? So they have the worst shots imaginable sometimes. Now, granted, their average miss is a lot better than our average miss, right? The dispersion is tighter. The same could be said for trading, right? The dispersion of my misses might be a little bit tighter than maybe some of you on the stream here, right? The mistakes you make might be a little worse. I still make mistakes, though. I still hit bad shots. And we're playing in a random environment. And golf is also a random environment to a degree. You could have mud on the ball. You could have a really terrible break where you just get bad luck, top ticked, bottom ticked, whatever the analogy is for trading. A couple losses in a row, a Oh my gosh, look at Tommy Fleetwood. Poor Tommy Fleetwood. Did you guys see the putt he hit? How it hit a pitch mark and diverted away from the hole? The guy's trying to win for the first time on the PGA Tour. Did you see that? Talk about a rough break for a guy where he's just it's just brutal. So the analogy is very, very fitting for trading. You're going to have tough breaks. This market right now could just go vroom and gap, and I could get some slippage. Yeah. Thank you. I'll take that as a great compliment, Tildus. Now, I grew up in Alabama, so no one played hockey at the time. Nowadays, there are some teams in the bigger, metropolitan areas, but there was no high school hockey teams around the area where I grew up anywhere at all. I was playing golf at one of my clubs a couple weeks ago, and I was playing in a little friendly, competitive type event, and was paired with some people I don't know and whatnot. And there was this like 6'6" guy with tats, just a great build. And I was playing with him, and we shook hands, and he gave me a big smile. No teeth in the front. It's like, okay, I know what you do. Sure enough, he was, played for the Preds. Quiet session, right? Crude oil with a nice bounce off the lows there. Gold is unfortunately maintaining a nice methodical downtrend, which is obviously not good for longs. Over edge 30, 12 or 13. Probably this 33, 12 to 13 area is probably as low as I'll want to hang in this position. So essentially, we're kind of at break even around there. Again, it's not a move to break even for the sake of moving to break even. That's just kind of where, we've kind of gone rotational in terms of like Stowe uses the RTH VWAP and development value, and that area is around 14, with the 1.5 down at like 12. So I'd be fine to see essentially the very short-term dissonant position that this market is in, which is bearish from this guy and bullish from, I'm just going to approximate it, right? Something like this. So I'll allow it to come down into here and push those extremes on the RTH, but I'm not going to flirt with new lows in terms of a stop out on this counter trend trade. I just realized I blanked on a question I remember from maybe half an hour ago. Someone asked about playbooks and doing that. That's essentially what I'm talking about here. The reason I know how I want to manage this is because it's like a playbook type trade. I know the context, I know the situation, I know what I'm looking for, and I know therefore how to manage it. And then someone else asked earlier about kind of scalping and then allowing that to work into a bigger position. Absolutely. That can be a fantastic thing, because you've maximized the risk reward, right, with the short term, and then you understand there's real room to let it go. It's kind of what I'm doing on the stream here, quite frankly. It's not a swing trade for me, but again, this thing doesn't really start cooking until above here, right? Let him cook. Unfortunately, it's a beautiful downtrend. A market at all-time highs is, unless it's gone parabolic like we saw in the metals recently or even crude oil, it's typically a market where if there's good volatility there, I might scalp if it's kind of one of my scalping markets of choice. But then back to like core NADRO type trading, then no, it's probably not going to be something that's very compelling to put that type of a trade on for. You know, I was thinking about that the other day. We need to get an intensive for 2025. It's like I've been doing this stream, so I kind of feel like you guys are getting a little look at an intensive, but I also kind of play the cards a little closer to the chest and don't totally walk through just every single, like we don't do a full pre-market prep together on these streams and stuff. It's more so just about the trading and answering questions and stuff. So yeah, we certainly need to do pick a week and do an intensive here, maybe late summer, early fall, something like that. We do have a mentoring class coming up. As you know, Apteros almost sends out no emails. We don't do marketing. We don't do anything. It's just word of mouth. People find out that we're the real deal and they love us and they tell their trading buddies about it. And we literally, you're not going to see ads or we haven't posted from the Apteros Twitter account, I think, since April. So anyways, we do have the next advanced group mentoring class coming up in mid-July. There's only 5 seats for that. I'm not sure how many of them are taken up so far, 1 or 2. So we do have a few spots available for that. So reach out to support@apterostrading.com. You have to be either a NADRO or a scalping student. I'm not going to mentor random people off the street for any kind of methodology or whatever, right? You got to speak our language. You can do other stuff as well, right? And be as unique as you want in that regard, but you need to have some element of NADRO or the way we teach scalping to do mentoring with us. And it'll be directly with me for 12 weeks. Kind of a weakish high up here. I didn't really pay much attention to that before, but not really well, just for future reference, this could be a spot where we see a little stop run. Given that it's getting within proximity to this level I'm really interested in, and I'm down to 1 contract here, it's not going to be something where I take risk off or anything. But we'll certainly watch the reaction. What's my history? Our sessions run pretty long. It's like usually like 2 or 3 hours for per session. But yeah, they are weekly. What's my history? I don't know if we got enough time for that. I can give you the super Cliff Note version. Fell in love with markets in the 6th grade. Went to college, but was studying molecular biology, wanted to be like genetics research. And I was sitting there in class every day with my laptop trading. And then I saw the movie The Pursuit of Happiness, and I changed my major the next day and put on the only tie that I owned and walked across the street from my apartments. There was a little independent brokerage office, and I walked in and asked for an internship, and they gave me an internship. And my sister is pretty high up investment banking, like MD kind of deal, fixed income research, and I got an internship in Charlotte. Then ended up sitting for a while on an FX desk there and was like, oh, these are my people. They weren't doing like a ton of flow trading. They were actually like taking risk. This was actually summer of um 08, right? Things didn't start to crack in 08 until like the cracks started to be visible at the tail end of the summer, if I recall. So I was, on a desk leading into that. And then, tried to start a fund and failed at that as a 21-year-old in college. And, struggled, tried to figure it out, and then really started to find some success. Some of the stories that I tell you guys about. And started to trade prop. Got on with S&P Capital in New York. Was there for 5 years. Wasn't such a good stock trader. I didn't really like chasing a bunch of things and news and all the catalysts and everything. And a lot of my like cumulative delta is really wonky in stocks because there's a bid-ask spread. So all the white prints in the middle, it's very, very difficult to use it in the same way. And started trading futures. Got tapped to start a futures desk at S&B, and then moved back to Nashville because I didn't want to raise kids in New York, and my wife and I were about to start having a family, and started Apteros in August of 2020. So we're coming up on our little 5-year anniversary here of Apteros. So yeah, my older sister, Harvard grad, investment banker, that type. I'm like a gunslinger, like Wild West black sheep. I would. That's how I would describe how she thinks about my career. What would you say you do here exactly? Yeah, great movie. Great movie. Well, I just stare at the wall for the first hour and then Office Space, if you guys haven't seen that classic. Good morning, Leo. Good morning, Pax. Good morning, Stowe. That stapler, swing line, my stapler. So I was promised that I was getting my stapler. You know I can't say that on stream. I hope all of you got the Office Space reference from Stowe there. The other great one from him is he bangs on the wall. He's like, dude, mammogram on channel 10. Oh, me. That guy, that character looks oddly like the guy I took violin fiddle lessons from for many years. Like they look exactly alike. All right. I did say we were going to protect this position a bit into this kind of 11, 12 region. So let's do that because this market cannot get through developing value low. Look at this. You think there's a seller at the -1, guys? I think there might be. What are we doing at this position? What are we doing with our lives here? They're asking me to move my windows around. It's not ideal because I like the most important things more central to my eyes, but we'll do it for the stream. Temporarily. Hey, Chad, I'm watching Stowe right now. He's scratching his left arm. Now he's playing an air banjo. Now he's drinking coffee. He's really getting in there.
Morning, buddy. You weren't gonna let me just troll you from the green room, huh? I just watched Office Space again like a couple weeks ago. I watched that movie like once a month. That's an amazing movie.
Yeah, it's hilarious.
How's your morning going, bud? Pretty good?
Yeah, it's good.
On ES today. All right.
No. This
Gold.
is gold.
Oh my gosh.
Gold.
Okay. Gold. Sorry. It's very small. I was like, is that ES over there? 4 digits?
You saw 4 digits, yeah.
Yeah.
You got to look for the 2 decimal spots.
Gotta look. That's cool. I've still never traded gold ever.
You know, it's a very nice market. It's got that speed to it. Not today, but it's got that speed to it that you and I both love about NQ. And another really good market is actually silver. Last year I traded a ton of silver, so that they could be great markets from a narrative perspective, context, that type thing, and
Okay.
also short-term rotation, scalpability type of thing here. So yeah, I'm in this trade. I took a couple of paper cuts, a couple small losses to get into it. I was trying it like early over here, and then scratched and re-entered, and then tried it here and it worked, and then got taken out, and then got the re-entry here. So And then I scaled out half up here.
Great spot.
Yeah.
That looks good. I'll have to pull. Maybe I'll. Every time I say I'm gonna have to build a gold chart, something bad happens to me. So I don't know if I should say that out loud. I don't know. Every time I try to venture into a new market, something, some sort of shoe drops.
Something
so-
bites you.
Yes.
Something sucks on you.
Yes, it does. Yes, it does. Um,
No, we'll just leave it. Just leave it, man. Just leave it.
I'm trying to be in this NQ long still. I'm doing something different today.
Oh yeah.
And I think for the next couple weeks, I don't know. I've been struggling with like, I don't know. Ever since I got bit by that damn tick, I've been like in a weird funk. I don't know if that's just part of feeling like garbage from that stuff, but something I've been struggling with is like, I have a primary account that I mostly trade minis in that I've been working on for most of the year.
Mhm.
And I've been trading micros in this other account, and I'm having a hard time like making sense of both of them at the same time. So
Man, I've seen that a lot.
it's so weird. Why
It's
is
not
that?
easy to spread your energy and your focus and your forces between accounts,
Hmm.
unless you can like whatever, copy trade them or whatever technology to just treat them as the same.
Yeah.
It's really, really tough. I see that a lot with people trying to do like trade their personal account and trade, the Apteros tryout or that type thing, and they'll be like, "Well, I did really good in this, but blah blah blah." It's like, well, yeah, if you're if you're hitting a DLL in one and then you have a fresh round of bullets to go trade the other, then you might make money.
Right.
So it's just tough. If at all possible, just get that centralized focus, and whatnot.
Yeah. Well, something that I found, so I wanted to try to trade minis. That was like a goal this year. And something I found was beneficial from it is it made me better. Like it made me a lot more selective. It made me a lot more, my entries were better. There was just like no disputing it. So I liked that gift that it gave me. And so I worked on it and got, I built that account up well over this year. And then when I started this, I wanted to trade real cash micros on NinjaTrader thing.
Mhm.
Yeah, I'm divorced from it. It's like they're two different realities. And so I'm I'm trading minis today and to see if I can, but I mean, you got to put a lot. Oh, nice. Powell must be saying something. Those are
Right.
cool.
I saw that little flick down on some serious selling.
Yeah. Man, this 335 spot in NQ has just been absorption city up there today.
Mm.
Yeah, but so I'm gonna trade minis for a bit on. I'm gonna take a couple weeks to get used to it before I fund the brokerage account enough to have the margin for it. But I think I'm gonna switch to minis. I think I'm just gonna get rid of micros in general. I think they make me too loose.
Mm.
Yeah. So
Yeah,
that's
it's
what I'm
almost
working on
like
today.
a paper trading account that people don't take as serious. Yeah, yeah.
Yeah, I can't because I've got four. I find myself in all these weird spots where I'm trying to think about like too much stuff because I put 4 lots on and I have 4 different targets. So all of a sudden I'm managing 4 targets worth of expectation instead of 1 or 2. I don't know. I think it's just too many inputs. So I'm going to try to get rid of some.
Well, you want to prepare yourself for scaling up in the future and getting to 4 minis and all that kind of stuff.
Yeah.
So you really, rather than like thinking of it as 4 targets or however you phrased it and kind of more things to handle, if I could, I would recommend thinking of it as more of like units or tiers or something, right? To where doesn't matter if it's 2, 4, 8, 16, whatever. You think of it like I have 2 units. I scale half when this happens per my process, and the other half I manage according to blah blah blah, right? Like just simplify it in your mind, I think is important.
Okay. All right, cool. That's good. Thank you. That's a good note, and I'll take that. Yeah, lots to think about, Merritt. Always,
This game will
You know how it
keep you
goes.
humble and keep you on your toes. For those of you who didn't see my stream last week, I was like 0 for 7 or whatever.
That happens, man. Yeah, it especially in this. I don't know. We're in the middle of all. Positions can reverse on you in the blink of an eye right now. So, trying to get my position tracker right. But yeah, so I'm still going to show the stats. We're still going to do all the math. I'm going to use a funded account that is functioning basically the same as a $6,000 base account. But until I feel comfy, I'm just going to chill on this and see how the transition goes. I feel like that's a decent way to manage the risk.
Yeah.
So yeah. Oh, also I'm gonna make bread videos. I got the tripod in the mail yesterday, so I got the how people make cooking videos where you can just see what their hands are doing.
Uh-huh.
I got
the
the
overhead view.
Yes, so bread videos are incoming. I'm excited for that.
That's funny. But did you land somewhere on the trading cards thing? Is there?
Oh yeah, I'm doing it for sure.
All right.
I need to get yes, I'm in the process of teaching myself how to use the parts of Adobe Illustrator that I'll need to make the templates myself. But yeah, I'm gonna try to get a whole set done by Jackson Hole, and that will be the release date. So we'll see. I've got some feeler emails out to hopefully some interns at the Fed, so we can see maybe there's a cool intern somewhere that can sneak a couple signatures for me at some point.
Nice.
I mean, DC is pretty close. I could just cruise down there, get these cards signed. I don't know.
Drive past a few barriers and just see how it plays out.
Yeah, why not? They're not doing much else down there, so might as well.
Oh me.
There's been all this ice at 6130 on ES today and 6125. It's just like, dude won't stop reloading.
That was nasty and in queue for it to just drop out on that selling like that, and now it's up at new high.
Yep.
Pretty nasty conditions right there.
Yeah. It's quite rude. I assume that Powell testimony is still going on.
Yeah.
Hey Tracy, hey, I haven't been paying much attention to the chat either. I seriously think this dumb tick has made me slow, Merritt. I don't know. Like my speed is gone. Tracy, is he still?
You're just getting old.
Oh yeah, it's both, dude. Tracy, is Powell still testifying? Is that what keeps wicking me out of these excellent positions? All right, still going. Fair enough. Fair enough. Merritt, does gold close at a weird time like some of those other markets do?
Yeah, I believe it's 7:20 to 12:30 Central.
Okay.
Yeah.
Oh, whoa. Okay. That thing closes way early.
Now, it doesn't hard close, right? That's its pit hours, kind of like treasuries or whatever. 1:30.
Does that still how much is that a factor now?
I was looking at the wrong market. How much is the pit close a factor?
Yeah.
It's not a huge deal. Yeah, it's 7:20 to 12:30 Central.
Okay.
It's not a huge deal in gold. It's just not.
Okay.
You certainly get a little volatility around its open in the morning. But it's kind of like, look, I'm still like a major global asset and equities are still trading and everyone else is still trading. We're still trading, it doesn't really like ags, like if you don't want to hold overnight, you better be flat coming into, midday when those pit closes are.
Yeah. But gold still hangs out in parties. Like
gold
kind of like
definitely
CL
parties.
does too.
Yep.
Okay. Did you break out the CL chart for for Sunday? Were you ready for Globex Open just to hit gold or to hit oil?
My my wife is on like she just left this morning to go on this trip to Africa, and
Whoa,
we
okay.
had this meeting on Sunday, and so I I was like texting my risk manager like, I am unable to be at the desk. You got to be on top of this, and they took care of things. So no, I was not able to be at the desk, and
Oh man.
yeah, she's there. She's going to this pretty cool, like school for kids in Malawi.
Oh, cool. That's incredible.
Yeah. Do you have strong opinions on NQ today?
Nah, not really.
No. Yeah.
It's well. Let me pull up the big guy.
Well, don't tempt me with a good time.
I mean, I'm not stoked to be up here, but I'm gonna have to keep buying it until until it proves otherwise.
I think you've shown on from what I've seen watching you on this stream that you're good at that.
I try. They didn't make it easy. I really wanted to catch. Yeah, yesterday was annoying. I was pretty sure yesterday was going to be the breakout, so that's why it wasn't. Obviously, I really wanted to beat this. I mean, we have the monthly +1 was at 22,010. And I really thought we were going to chew through that around, like 10:30, 11 o'clock yesterday morning, and just sold right off. And they got me out of my runners, and tried again a couple times, and then I just gave up, and then that's when it went. So, but now that we've broken out, and now that we're in that monthly top band, strongly trending, I'm going to try to keep riding it. Even though today is a treacherous nightmare with, whatever is going on geopolitically, plus Powell talking into a microphone about who knows what. But we're gonna try to stay on it.
What time frame chart is this? What does that say? 30 minutes?
Yeah. I had a 30 up here. I'll pull it back up.
So like if you look at the range the past, I don't know, since the second week of June, like since the 8th or the 9th or something, how often do we see NQ do this where it takes that one last screw you to everyone before it makes the real move, right?
Yep,
I think if
classic
you're
move.
if you're going to be trading NQ, that's got to be something that we essentially use to our advantage, knowing that about its character and nature and how often it does it. Like you've got to be just all over those, man. But it's tough because everything about those moves says, oh, well, this idea is wrong. This is, now just totally like we might need to start looking short, like it's really, really tough to kind of adapt your thinking and analysis for that.
Yep. It's also something that's hard to be on top of all the time, because you can't I don't know. I can't trade for 8 hours a day every day. I eventually have to stop trying to trade. And this is, of course, where they get me is after trying to catch this all morning, it does this weird afternoon. I mean, yesterday was extremely strange as far as the way that move played out, but that's how it does it. So, but good news is you can always buy high and sell higher. So just because we didn't get in down here doesn't mean that we can't still get in up here. So
the Stowe special.
It was a good lesson. It was because I would always think I missed the move. And so kind of the way I operate now is you've never missed it. It's still there if you want it. There might just be less of it now to grab. So I don't know.
Yeah, I could learn a thing or two from you about that. I even the bounce, like I was calling for the kind of the low there once we got that second higher low there in April in Q.
Yeah.
For that's a really good buyable swing trade long. And I kept waiting for that picture perfect pullback to like the -1 for the year and prior value for the year and like these
Yep.
big levels, and it just didn't happen. And so I was left on the sidelines with, I was like really, really ready with like dry powder for like that swing, and I did not get it. I did not get it.
It's so mean like that. It's such a mean index. I don't know. I don't know who did what to it at some point, but
Who hurt you, NQ?
who hurt you?
That's funny. Well, man, I'm going to sign off here.
Okay. Sounds
Slow
good.
trade, and got some traders to attend to and whatnot. So good luck to you, brother. Good to talk to you as always.
Yeah, good to talk to you too, my friend. Great trading today. I'll pull up a gold chart just so I can see what the hell you're up to, just for curiosity's sake, at least. What do you? Yeah. So you just have same normal bands, same look at value areas, that sort of thing. Does it behave relatively? You know.
Absolutely. No,
Okay.
no discernible difference in my opinion. I mean, if you're looking at my chart, look the way it comes off the -2, look at the way it holds the -1 during this
Yep.
trend. It
Cool.
does VWAP projections. It does, traversals of the DVA. It does it all. So
Okay. Sick. All right. We'll do it. We'll see if gold can hurt me again. We'll see. All right. Later, my friend.
see you, brother. Take care. Bye, chat.
That's fun. I love talking to Merritt. Good morning, chat. Hey, Jim. Good morning, Jim. Hey, Deli. Yes, like the chat, like the chat. Those likes help us. It makes YouTube happy. Hey, Salty, what's up? The Fibonacci Queen. I don't know. There might be more people that have claim to that title. I don't personally know, but I would imagine it's hard to be the undisputed Fibonacci Queen. You might have some people to take down first. I should go to Jackson Hole 6. That's a good idea. All right, I missed all these questions. I've been not paying attention to the chat, so one thing I'm going to focus on today is I'm really going to get in, make sure I'm answering everybody's questions. So yeah, let's talk about today. We'll go through my normal spiel. Woke up today, open the chart, check that London Open. A little messy. In context, let's look at the whole overnight. Okay. So here's our initial Globex Open way down here at the 22K 78. And who knows? Ceasefire news. Could be anything. But yeah, big run. It's holding VWAP. It's trending. Gets into, continues to trend all the way up until London Open, and then London Open becomes a pretty serious pivot point. Up here at this 360 area, 355 area, you see get a retest here. Other than that, we've been trading below it, grinding around. Now we're trying to grind through it at the moment. This was my initial target for my trade. I was trying to get off here. So coming into this a little mixed. Big Globex Open. That print is 1,000 miles away, but the London Open is resistance. So we're just kind of in this box right now. I'm leaning long because of all the higher time frame stuff that I shared for a second when Merritt was on. We'll look at it again. We're above this 22K 10 area that I was trying to push through yesterday. I didn't catch it, but I took off my runner there. I had one left, and then I took a couple trades that were trying to stay on this trend. It just didn't materialize. But this is our 5-day profile. Obviously, we have left this node in the dust, and we are building this node up here. We also, this was, I assume, some overnight. Yeah, this was our overnight node here before we got into this push that got us to the London Open. So I don't know. Still, I don't know if you can call it bullish or just like I'm just trading the long side based on what's happening here on at least a 5-day time frame. Man, we can't get through this. We can't get through this green box. Look at this. Not great. As far as the order flow today has been, it's been weird. It's been really busy. There was a ton of selling and absorption in this 330 spot here. Again, massive, just like big passive seller up in here. Once we broke through him, he became support for now, so that's good. This is kind of turning into a trendy-ish time. So, but again, we keep running into these passive sellers the whole way up. It's just taking forever to grind through them, and we keep getting these big liquidation breaks off of them, like, and these are good buyable opportunities. Unfortunately, I was talking, and then also I had protected my position that was in profit here, so didn't get that off. Didn't get this ad here, didn't get back in here. So now we're just kind of sitting on hands. But we can talk about my executions for the day. So far, yep, chilled here. Scaled. I took a long here to try to, just grab a couple points. Early in the day, first 15 minutes, I'm really just grabbing 10 to 15 points on these quick scalps and moving stop into profit fairly quickly too. So, yep, just took a couple quick points there. Waited until we got this OR mid retest. Put 2 on here, took them off, got another one off, and then stopped on the runner. Took a long here and was immediately, instantly liquidated almost on this nasty liquidation candle. But then I got the trade back on there and scaled one there. And then ultimately was stopped on my runner right here. So I was dragging this entry into profit from 22.85. So yeah, we got 30 points on that runner that we had protected. And now I'm just hanging out. If you didn't catch the conversation that Merritt and I were having about minis and micros, I'm going to do something different for the next couple weeks. And maybe switch to trading minis in the cash account. I'm not sure. I've never done that before. Ever. I've only ever traded minis in funded accounts or cash account or live accounts that I have received through funding programs or bucket shops or whatever you want to call them. And whenever I try something new, obviously there's going to be some learning curve to it. I'm going to take some hits. So I think in preparation for that, I think the best thing for me to do for the next couple weeks is try on, a 2-lot mini position with a funded account. And this is a fresh one. It's going to serve basically as a $6,000, margin account. And I'll still share the stats. I'll still, obviously you can see all my fills and all the stuff. And I think we're going to do that. I'm going to give that a try. And if I'm confident after a couple weeks of that, then, we can put enough loot in the cash account to cover the margin for a couple minis, and we'll see how that goes. Because I had a lot of success with that this year, and I've just been kind of not having the same amount of I don't know how to explain it. It's not, I'm not as in sync with trading micros for some reason, and I don't understand why. I know that trading minis makes me a better trader in a lot of ways because it makes me more selective of my entries. Um, you have to be a lot less sloppy. You have to be a lot tighter with your stops. So I think that benefit that I was getting from trading minis all year this year isn't carrying over to what I'm trying to do with the cash account. It could be like a mental thing. Who knows? I don't have a clue. Yeah. So yeah, I'm gonna do this little experiment for a couple weeks and make sure that it feels okay. Make sure that I fine tune, and we'll look at the stats together. I'm gonna fine tune stop size. Target stuff. We're gonna do like we'll start to look at the May MFE, make sure that we're dialed in and collecting the good ratios, all that stuff. So yeah. Salty, I'm not trading ES. That's not true. I do trade ES plenty. I trade them both at the same time. But for intents and purposes on this show, I primary trade NQ, so we just have one chart up. But in my life, I certainly trade ES. No, Mark, I don't. The commissions are really good, so it's not that. I think it's just a mental thing where I'm being lazy. Or it's not lazy. I'm being flippant. Might be flippant. I don't know. Anyways, we're gonna try it. I gotta shake something loose. The other thing, I'm gonna make those bread videos finally. I got that camera. So that's the big announcement that I teased everybody with to come in here and hang out with me. So there really isn't a big announcement. Sorry. Yeah, we'll see. We'll see how we go with minis. Yeah, Omni, that was the big. I don't know. When you talk every day into the microphone, you kind of run out of stuff to talk about. So I was like, man, I should actually make those bread videos. No, it's not complacent. I think it's just flippant. Honestly. Matt Majid Sony asks, why didn't I get out earlier? It's a downtrend. What's a downtrend? What part of this market is in a downtrend right now? Show me. I don't know what you're talking about. Unless you're talking about gold. Maybe you're talking about Merritt's trade? Because gold could be in a downtrend. I don't have a clue. I haven't seen a gold chart since the last time I lost money on gold, which was months ago at this point. I don't know. Like what? Look at this. Here's your big chart. Yeah, this go all the way back to the beginning of June here. So you're looking at like, I don't know, 24 days of consolidation that is just now breaking out to the upside. I don't know. It could just be, maybe they're trolling me. I don't know. That's right, Sai. I will. Also, I was able to get my refresh time way down, and it looks great today. It is cruising. So I'm having a great time. Across the board. Hey, Maureen. Yeah, this blue and red thing, this is a delta volume profile. And what this is just showing is this is showing all of the delta that is, accumulating at different strikes along, where price is. This specific delta volume profile is set to refresh every 60-point rotation, but that's just a personal preference. You can make that refresh at any rate that you want. You can have it show the entire day. Lots of different ways to play that. I don't know if I should try it. 0 milliseconds. What would happen? Would my would my machine implode? Maybe. I'm not long at the moment, Mark. Where's all time high at? I don't even know. I guess I could look. I don't really have a chart. Goes back that far. Were we talking about back adjusted all time highs? I try not to have those figures in my mind. I don't want to think about it. I don't want to know where all time high is. That will just give me, bias for time frames that I don't need bias for. Yeah, blind man, you can just keep the delta however you would like. I run it so that it's just the full session. Also, I have that pulled up too. So it's good to see the full session delta as well. I like to look at both. Yeah, I like to have both. That way you can have like broader picture, full day delta, and then each individual rotation size based on how you're trading, based on, the targets that you have in mind. So 22,740. So we're almost there. It must really be summertime. You guys all have weird numbers now. So which is it? 22,500s, 22,740, 453. Yeah, I don't. Well, we don't back adjust, Mark. If we say back adjust, if we back adjust, Leo shows up in the chat. If you say back adjust enough times, he'll be here. That's true. We haven't been at a 420 in a while. Maybe that's why I feel so in a funk. I haven't seen my least favorite strike on NQ in forever. Thank you, Leo. Appreciate you, bud. So we're almost there. We're like right there right now. Well, I don't have a position on Omni since today. I'm often not in a position, by the way. Thank you. And you see what I mean? I'm trading minis. I'm not trading micros anymore. For at least a couple weeks while we do this experiment. That's a pretty big single print that just floated around. All right, so there's our 11:30 turn. There's our London close. I want to go back and see where we're at here. All right, so London open. So we did make the overnight high after London was open. Okay. Boy, that stop out was super mean, wasn't it? Merritt said I was itching my shoulder in the chat. I was just this is how I play guitar while I'm listening to music, and I didn't realize that I was doing that. It's pretty funny. Salty, do you really use Thinkorswim? Are you 1,000 years old? I mean, I'm pretty old. I don't even use Thinkorswim. Commissions on Thinkorswim is enough to kill any trader. I think it was like $6 a round trip. I think that's where everybody starts. But we building yet another node up here? Okay, make sure I'm good. 2 lot. ES is doing this. I would like to see this come down at least to 360. If not 355. It's going to break. It's going to break. So we see all this bid delta coming in at 365. So I'm just going to try to keep a tight watch on this. See if that bid delta is going to continue to be supportive. We can get this. Get this overnight high run. Just one lot. Let's see, 1133. Tracy, is Powell done? Can it be over? Come on, bid. Show me what you got. I keep thinking that. That's all I think. Powell's still talking? All right, cool. Is he doing it? Is this congressional nonsense today? I think. I didn't look. I didn't read that part. It's pretty happy. And passive seller up here too, though. So the way I use this, I've explained, I've walked through a couple times, but this is so we're long, right? Cool. It's fine. As we come into price, and you see blue, right? This is people crossing the spread from the bid side to the offer side, right? So blue represents some passive selling, people getting filled on the offer. When you see, as we climb, when you see that happening and prices continuing to move through it, that means that buyers are still happy to buy higher. So we're buying through this seller now. If we can get through them, we'll be able to get higher, get this overnight high. Same way that we had to, if you go back and look at this price action here. See, this was a big passive seller in this area, 55 to 60. We came up, tried to sell through it, had to pull back, had to buy through it again, pulled back, finally beat them up. So, I mean, it's a process. Absorption is a process. It takes forever, and you don't know whose team you're going to be, whose team is going to win until it's over. But the thing that you look for is the opposite of that to support your position. So we see this bid delta coming in here, being supportive. So sellers not able to push through these buyers. That's good. That's good for our position. So that's what I'm monitoring, on the dawn. That's what I'm looking at for delta stuff. It's extremely basic. It's just blue team versus red team. What's the logic behind what, Keith? Which part? Here comes a hero on the dom. Some guy just jammed 120 lots at 375. Trying to run this overnight high, possibly. And he pulled. Okay. The bid's really pushing up now. All right, so let's watch reaction here when they run it. If they run it. If they run it. I try not to say they, but it's really hard not to say they, to be honest with you. Because, we got to talk about somebody that's doing something. I don't mean like the Illuminati they, just to clarify. I just mean these numbers on the screen who I have to assign personalities to. Quick blip. Pop back up. Come on, you turkeys. Let's go. Let's see, 13 in. Nasty pause. This 384 guy is just sitting there. Trying to get a fill. Taking a little long. I mean, I'm trying to gauge reaction at the overnight high stop run, and I don't know. Maybe we're just gonna come 6 ticks away from it, and not. And there will be no reaction. I do like when big MGI levels like this get like just a little bit front run by a large position. That makes me happy. That makes me more interested in holding for this break. I don't know. Everybody on the planet is up here at 382, 380, 81. Let's see, yeah, there's a lot of offers stacked up the whole way. Be somebody. You can do it, man. Do it for America. There's probably more ice on ES, right? I don't know. I haven't pulled that. Let me pull that. Somebody piling into that too? Yeah. Yeah. Look at this guy. He's partying. Okay. Good. Nice liquidation break there. Not afraid of it. I mean, that's what we've had this whole time. And you can't really have this, like, you can't really get through that kind of absorption without some of those. So, I mean, we had them all day. So you can't let these things shake you out of a position idea, as small or as, wide as your target may be. Let's go up to 420 for the beam. Because those liquidation breaks are going to happen. Buyers are going to get super tired at the high, and then they're going to need to bail out for a second, catch their breath, and then you need to see if they step back in or not. I mean, honestly, this was not that much quantity-wise of absorption compared to what we've been working on this whole way up. You see like 500, 500, 700, 700 again. Just little batches on the way up here, about every 10 or 15 points. So, still happy to chill. Hey, hot dog. What's good? What's good? Oh, Keith, switching to mini. Sorry, I got that. That was extremely rude of me. I asked Keith to clarify what he meant by something, and then I completely got sucked into a different thing and working on the trade. So the logic is that micros are, I don't know. I'm in some sort of mental hurdle with micros, and I don't know what it is. It might be that it's like I'm too flippant with them, too ready to get into a position because it's, not that much size. There's lots of excuses that I can make along the way for my trading while I'm in a micro position. I don't know. I think I just am getting sucked into some negative mental game stuff with that. It's my fault. It's not the, it's not the instrument's fault. But looking back on this year, I've had a really good experience with trading minis for the first time, honestly, in my life. I really worked on that this year. That was one of my things that, February and March, I really worked hard at. And a lot of good habits came from trading minis. So I don't know. I think I only sized down just for the sake of, it's a lot. I mean, I've never traded cash minis ever because it's a lot of notional value. That's a lot of money to put up for margin just for a, blue collar trader like me. So, but I mean, maybe I should consider it. And that's kind of where I landed over the last couple of weeks, looking at my stats and looking at and just feeling, thinking about how I feel, how I've been trading mentally. So yeah. But no, I wouldn't go from $120 risk to 300 risk. So the risk would have to be managed differently. That's why. Hey, there you go. So yeah, that's why I'm going to experiment with this funded account for the next couple weeks and get comfortable with just how much risk that's going to be. What's a responsible way to manage that? How much margin do I have to put up? Should I put up? That sort of stuff. Oh, cool. I love when Fed people say this. It's so cool. Maybe I'll put that on Powell's trading card. Long rates would rise if Fed credibility was questioned. Okay, cool. So it's just another way to say stop questioning my authority. It's so funny. All of this is so political. Um, yeah, Keith, I'm going to try it on a funded account first. But I still want to share the stats and I still want to go through the same processes with everybody. Because I'm still dedicated to doing that. I think that's useful, but this is, you guys are trading my real life with me, and aside from being on the show and talking to you, I also have to make money from trading. So I got to pivot. I have to try to maximize my you know skill set. Yeah. Yeah, Keith, it is scary with a cash account. Yeah, that's what I mean, I've never done it for that reason. It's intimidating. Oh, thanks, Nick. Yeah, yeah, the the rest of the OFL dudes, and all the people that I trade with that you guys watch on here too. They've been privy to my mini experiments for the last 6 months. 6 months. Yeah, Mark. I mean, prop is a loose category. I would consider the companies that I use for this more like funded programs. I don't want to conflate real prop trading with, which stands for proprietary, and real desks that exist like that with what this is. But I mean, it's what I've used for years. So, but yeah, it's funded, so it's through the phase where I don't need to pass a test, so it exists. I can't omit. No, I'm sorry. Yes, hot dog. That's exactly what I did, and it rules. It is awesome. I did not know that was a thing, and I'm stoked. Hmm. Let's see. Yes, it's 6. Hmm. Yeah, it's still not even close to its overnight high. He still has another five or 6 points. I mean, this is a nasty, super nasty grind. I don't really want to get out. Even though this overnight high has given us some trouble. Holding this node. Well, we peeked through it twice. Now we're getting that proper absorption. I guess that player was just waiting for the actual overnight high to run to really start piling those lots on. Gotta think. Yeah, that means a bid's stepping in too, though. So when it continues to be two-way trading the whole way up, the trend's not over. I mean, you can see it's just glaringly obvious if you just look at this price action. This is just like robot grind. So I don't want to get out. Trent, that is I use the Order Flow Labs volume indicator. But there are many. There is one in the NinjaTrader order flow suite, I guess is what that's called. You can use that volume profile. I'm sure there's other third-party ones too. Here comes the seller.
So,
hey, good morning, Jim. What's up, my friend?
nothing, man. I see green.
Yeah, it's green. It's green for now. I'm long the highs into this. And I don't know. They're getting grouchy about it now. So we might be coming out of this position, but
I see.
Uh-huh.
Oh, you be quiet. Sorry about that. There was the iPad thinking I was talking to it instead of you.
You talking to Siri?
Apparently, we both were a second ago. Oh yeah, it's like today's like it's like all right, we have a double top brewing right now on a session. Not quite there yet, and you expect some sort of retracement. Hopefully, not a big one. And you are in the MNQ, right?
No, I'm just in NQ now.
Ooh.
Yeah. I'm gonna bump up to minis, I think, Jim. I think that's where I've landed. I think that micros are messing with my process a little bit.
Okay.
So this is a new experiment. I'm gonna use a funded company for the next 2 weeks, continue to share all the same stats. Obviously people can watch me trade. And it's funded. It's through the process. So it is a account that exists. And then if we learn some stuff over the next couple weeks and feel good about it still, then I'll move that over to the Ninja account.
Got it.
I've never traded minis on a real account though. That seems terrifying to me, Jim. It's a lot of responsibility.
Yeah, I mean, it takes an adjustment, right? A mental adjustment to go, all right, so now my risk is just increased by 10.
Right. Yeah.
Yeah. And then your tendency then is to like, well, I'm going to change my strategy. And then you start changing your strategy. Well, the first strategy was good. Why did you change it?
Right. Yeah. So, and I like the strategy. I feel good about everything that I'm up to in general. I need to keep it going without having that mental battleground exist in the process. And I know that's not possible. So I'm going to try to get through the mental battleground part in the most risk averse way possible.
Yeah.
Yeah. I don't know.
Right. Well, I'm going to keep my finger. I like the trade. I really do. I mean, this is, we're only up, MNQ is not just about 300 up 300, and that's it's easy peasy for the NQ.
Yep. Yeah. So we'll see. I don't know, and I'll be back this afternoon, so maybe we've got a couple opportunities at this spot. But
Well,
the bid's here, baby. It's here.
I do like you just the way you are, by the way. I got my Mr. Rogers cup. So
Oh, sick. Oh, that's so good. Now, does something happen with the sweater, like when you put coffee in it? I can't remember. Okay.
no, I don't think so. Oh,
Okay.
maybe. I gotta try that. I just have water in it right now.
Oh yeah, put something hot in it and see if the sweater changes. I think it's like
Whoa.
yeah, they said there was something magic about it.
There's a ton of, let me get in there. There's a ton of magic in this cup, man. We got
Yep.
quotes from this dude.
Yes, he's
Anyway.
he's probably the most cherished Pittsburgh native that exists. Has to be. I know.
I love it.
I grew up with Mr. Rogers. So
Yeah. Well, by the way, the Pirates did score more than 2 runs, so they won a game. So
yes, that's right. And we
Yeah.
took one from Milwaukee. So
Yeah.
win.
Yeah. Yeah. Don't tell Ed Jerkin. He's one of our colleagues over here at NinjaTrader. He's a
Big brew crew guy.
Brewer fan. Yeah, he's from Wisconsin.
Okay.
What are you gonna do?
If well, when the Pirates inevitably aren't in the playoffs, I typically scoot over to the Brewers. So
Yeah.
yes, of all of the NL Central teams, the Brewers are my second. So
Got it. All right. Are you here this afternoon? No,
yep, I'm
yes,
in.
it is. All right. Double duty for Stowe. Awesome, man. I appreciate it. Well, great job this morning. I'm going to keep my fingers crossed on the trade you got brewing right now.
Thank you, man.
And we will see you this afternoon. We're going to do a really quick edge report right now and end the morning session. So thank
Sounds
you so
good.
much. I got to
Thank
share
you,
my
chat.
screen, of course, and we'll do that right this second. Oh, man. That was awesome, man. All right. Let's take, I was talking, Merritt was talking about silver. We had an edge alert on silver. Let me get it. Let me get to it. I mean, this is an interesting kind of formation that we have here on a daily chart, and then we'll go to the intraday chart because the intraday has been kind of wild in this market. We have this, I have anchored volume weighted average price from June 2nd. And it's just, again, this is where this trend started. That's why I anchored it there because this is, we were consolidating, boom, breakout to the upside, trend all the way up. So that's where I drew it. And we've been trading below it up until today. Today, yeah, we had a couple wicks underneath it. So what? Today, though, actually the body of the candle's below that anchored VWAP. So right away, my warning signs are up saying, all right, we might be having a significant retracement here. And sure enough, we're south of that 38.1%, just by a little bit. But earlier today, we wicked to that 50%. Remember, the March highs here, this was an area of resistance. Now it's an area of support. So we'll see if this just stops it cold and we kind of resume our rally back up, which could be the case. Or if not, it could be a little bit more to the downside. Remember, $34 is my line in the sand here, and we're quite a bit above that as well. So there's some downside potential. Intraday, really quickly here, we got some great mentor Q levels. We got some great pivot levels as well. I mean, we sold off big time. We lost VWAP in the rearview mirror. We had one VWAP touch. It was a good sell opportunity. Past performance not indicative of future results. Then we sold off again. We broke through that one-day min here at Mentor Q to the downside. That's 35 spot, 54 half. And then we came all the way back down. And this is the initial balance low. This wasn't overnight. This wasn't after the initial balance. I mean, this was the initial balance low. We stopped on a dime, and then we drove all the way back up north of that one-day min again, north of the S2 again, but we're still below VWAP right now. So, I'm looking for another VWAP touch maybe in the silver market to see if we can continue to the downside. Now, put support is right smack dab right there, 35 spot 75 as well. So that also could be a little bit of a magnet. The volume profile is pretty kind of weird looking, but we do have a point of control way up at 36. A spot 04, but we haven't traded there really since before 8:30 this morning. So that is the story of silver. I just wanted to point that out today on our edge report. At the end of the day, it is 12 noon. Appreciate everybody being here today. All our guests were awesome as usual. Chat, thank you so much for participating. You make this great. And remember, we're going to be back, me and Shai, Hot Commodities Report 2:30. And then after that, of course, we're going to have the Order Flow Labs guys trading the close. Until then, get some rest, eat some lunch, put your feet up. We'll see you in a little bit.